So it is saying meeting is on YouTube now. So let me confirm it with some people. YouTube now. So let me confirm it with some people. YouTube now. So let me confirm it with some people. Okay, then there is no problem. I think we are good to go. So let me confirm it with some people. Okay, then there is no problem. I think we are good to go. So let me confirm it with some people. Okay, then there is no problem. I think we are good to go. So let me confirm it with some people. Okay, then there is no problem. I think we are good to go. See, the voice repetition and all that was because of me opening both Zoom and YouTube. I think all those people who are not able to log into our Zoom, I think most of you guys are here already. We have a participant capacity of 100. I thought uh, we would do Zoom. Otherwise, I would have done only YouTube. So Zoom will actually let me interact with you if it's required. Uh, Give me a second so that I can quickly put the link to other platforms as well. Uh, which which video is that YouTube live working fine now? So have you guys checked it? I can check it once again so that we can be 100% sure that YouTube is working. Okay, it's working fine, is what they have said. I'm just going to keep another chat box open for YouTube separately so that I can interact with all of you there. Uh, I know that you have written an exam today, most of you, unless you had an exemption in that paper, you would have written that particular exam today. So, our entire intention today, my entire intention today is just to ensure that you guys you guys are able to utilize today's time. Like, I'm going to run this session till the time I get tired of, or like you get tired of. So at one point we will stop. I think 5 hours is what I wanted to spend altogether, because I think that's all you would require. Okay. So please ensure that your audio and audio is fine, your video is fine, your internet is fine, and all that, because I'm just doing it by myself. So I don't have any support mechanism wherein I can ask someone to help me with attending your technical glitches. I don't have that option available with me. So please bear with me. So please keep yourself mute. If possible, I'll give you some time to ask me questions, but that's only in the end. That's only in the end, because I have to speak, continuously. And do not think of this as a class. Please do not think of this as a class. I don't want you to pressurize your brain, because you would have had so much of things that was going on with your examination today, and I know that you would have been already exhausted, but you still had this particular intention that you wanted to just come and then you know attend another set of revision today, so that you can maximize. So if you're writing your first group only, like there could be some of you guys writing only group 1. So if you're someone who's writing group 1, just give all that you have, like all the power, all the energy that you have for this examination, because with that you can just be done with it. Please let us not think about costing examination. It's very difficult. Your brain would now be asking yourself, by the time you're listening to me, they would be saying that, oh, that question in costing, this question in costing. I know that it might happen, but try to focus back to what I'm speaking of, because I believe that it will be really, really helpful for all of you. And please try to bring back your focus here. That's why I'm saying that all I want you to do is, like, be relaxed. Just try to listen to the day before the examination, and then 1 2 days before the examination and all that. Generally it does not happen in an order where people could prepare so much. Like, people say that you have 16 hours, 18 hours, 20 hours, 24 hours in between exam, but I don't think anybody actually goes through the entire topic and then try to understand it. So that is something, that's the basic in which we have to start here off. Okay. So whatever you're hearing today, try to take it as a bonus. What I'm going to do, I'll tell you, so that if you have some different plans altogether, then I don't want to push you to be with me for the entire night. Okay, so it's a late evening, you're tired and all that. It's all understood and then taken. So what I'm going to do is that I'm going to give you a brush up. So first thing that I want to do is that, if you guys are not having my notes, see, I'm supposedly, and my plan was to uh, give this quick revision to my own students. And I was thinking that all of you guys would have attended my classes at some point, or would have gone through my notes, because my discussion is going to be completely with my notes. So what I'm going to quickly do is, I'm going to just put out the notes link on the chat box. Okay. And on for YouTube, I'm going to put it on the comment. Okay, so that you guys can quickly look at and then download those notes. If you don't have it, okay, if you have it, there is no problem. Then whatever institute textbook you have, please carry it and then keep it next to you. That's something that I want you to do immediately. If you don't have, you just keep it. Have a bottle of water with you, so that you can sit and then just relax and then sit with me. And then we will try to breast through all the topics and then try to give you an overall run of the entire topic. something that I would have covered at 80 hours in a normal classroom, something that I would have covered at 30 to 40 hours in a rapid revision. Now we just have 5 hours available with us. And what you have to do tomorrow, I'll tell you. After you finish this, I won't be able to do a lot of questions, but I can tell you these questions you look at, these questions you should not look at. This kind of a quick understanding is something that we can do. So what you have to do is that tomorrow morning, if you get like 1 hour, 2 hour, quickly try to breast through the questions that you have. And I'm pretty sure you will be able to do that because you would have already gone through some questions or the other for GST paper as such. And I can give stress on few areas. I can tell you a few areas are not very important. I'm just going to brush you through all those, and it is not going to be in the order in which I'm going to do, like wherein I start with GST and all. I'm going to just mix and match so that I will be able to cover maximum items. So I hope all of you guys are with me. So can I start off with our discussion? Can I have few yes on the chat box that you have? I hope you have the notes and everything ready with you. So for those students, so you can, both of you guys have put on the chat box the notes link. You can go ahead and then download the notes from there so that you can look at it. Okay, so I'm going to share my screen with the notes so that we can start off. I'm going to do it in a reverse order. The precise reason I'm going to do it in a reverse order is that the chapters that I feel that you will not be covering when you're doing the last minute revision, I'm going to do that first. So I'm going to start with registration. I'm going to finish the procedure first and then come back to the ITC and valuation, time of supply, and those areas which I believe you would have already gone through. Okay. So let's just quickly start from registration. So I've put on the link so that you can look at that. Now I'm going to share the screen. Please confirm me that you have the screen with you. See how I can make it better. Now you check whether the link has come for all of you. Okay, great. I think we are good to go. Let's take registration first. Okay. So how is it, how registration is relevant for your examination? I'll tell you first. So registration, what kind of questions can come from registration? There'll be two type of question that they can coin for registration. One is that they'll coin an MCQ question. It could be either something inside the case study, or it could be a separate question on any area that it covers on registration. Second one, there could be a small question in inside your descriptive question, wherein they can ask you a question on whether this person needs to take registration, or they can ask a question on what if they don't have an Aadhaar, or because there is an amendment on Aadhaar authentication, what happens they don't have an Aadhaar authentication related question can come. That becomes important now. So these are the sections that you can see on registration, that we have from section 22 to section 30. First one would be person liable for registration. So you have two type of registration that is applicable for you. So there is section 22 and there is section 24. Section 22 talks about person liable for registration based on a threshold limit. Okay. So first you need to understand what is the threshold limit, which I have given in the first chapter itself. Here you can see that section 22 of CGST Act talks about registration, and it is based on aggregate turnover. Aggregate turnover is being defined. You will have to carefully understand that aggregate turnover includes all type of turnover. One quick confusion that everybody has about registration is that question is this: whether interest, if it is given in the question, should it be added to the aggregate turnover when we are computing or when we are checking whether a person is liable for registration or not? The answer is yes. The interest income will be excluded from aggregate turnover only when we are computing composition levy scheme aggregate turnover. Because for registration, you need to include that as well. This is something that you should remember for the exam. Then This aggregate turnover based threshold limit will be applicable only if you are making an intrastate supply of goods. In case of services, even if you make intrastate supply or you make interstate supply, you will get a threshold based registration. But if you're a supplier of goods, and other than handicraft goods, you think it in that order, other than handicraft goods. So when you say hand looms and other notified goods, those goods, they will get threshold limit of 20 lakhs, 10 lakhs and all, even for interstate. All other goods, which means that a normal goods like mobile phone, biscuits, anything, if there is a interstate supply, then their registration comes under section 24. Okay, this is another point that you have to remember. Now let's look at what is the threshold limit. You have, for that threshold purposes, we have classified the states into 3 categories. And for examination, we have a code word to remember. We'll look from the first set of smaller category. So first is special category small, and we have a code word to learn, TNM2. Tripura, Nagaland, Manipur, Mizoram. Because Meghalaya comes under 20 lakhs. So special category small comes under 10 lakhs, which means that if their aggregate turnover exceeds 10 lakhs, they will have to take registration in those states. But if these suppliers fall into subtham states, that is the second category that we have, then the limit will be for all supplier of goods and services, it will be 20 lakhs. Okay, so 10 lakhs, 20 lakhs. Now, another important point that you have to remember in case of these limit that we have is, if there is more than one branch, and if any one branch happens to be in any of these particular states, then you will have to look at the lower limits. Say one person has one branch in Chennai, another branch is there in Tripura, or another branch is there in Nagaland. Then we will look at the 10 lakhs limit, but we will compare it with the aggregate turnover, which means it's all India turnover compared with this one. All India turnover will be compared with this lower limit of 10 lakhs. And then we will decide whether they have to take registration. Now, once we decide they have to take registration, where and all they have to take registration, in every state, say in Tamil Nadu, they might have a turnover which is less than the threshold limit. Okay. But when you add Tamil Nadu and Tripura and Nagaland, they have a turnover which is about 10 lakhs. But once it is totally about 10 lakhs, they will have to take registration in every state. This is another thing that you have to remember. But what if in one state they don't make any taxable supply at all? They don't need to take registration, say there. So which means that they need to take registration in every state where they are making a taxable supply from. So there is a question in our practice manual which covers all of this. And there is one question that is there in your RTP, which are important for this. Then, what if they happen to be in other states, which means most of the categories? What is Saptam? Sikkim, Arunachal Pradesh, Pondicherry, Telangana, Uttarakhand, Meghalaya. So these are the states where you have the limit of 20 lakhs. In all other states, so Saptam and TNM2, if you keep it aside, all other states, our limit would be based on if they are supplying goods or they are supplying services. If they are only supplying goods, and if they're supplying PTI, pan masala, tobacco and ice cream, their limit is again 20 lakhs. Similarly, if they're supplying service or if they're supplying goods and service, their limit is again 20 lakhs. Now, what you have to look at here is other cases, which means other than PTI, if they're supplying goods, their general limit, if they're in general category states and they're supplying other than PTI, their limit would be 40 lakhs. So this is what you should remember for the examination. There could be a question on these limits, which are very important for us. Now, another very important aspect I want to talk to you, which is there in our registration chapter as an amendment. So I'm going to quickly run to registration chapter and then show you that amendment, which is not an immediate amendment, which is applicable only for your examination on 12th. It's an amendment which came for the last exam. So if somebody would have already gone through, well and good. Otherwise, I'm going to look at that now. This is in relation to interest. There in our registration chapter in our notes. Okay. So this is the amendment that we had for November 20 exam, which is there's a proviso inserted in Finance Act 2019. And what is the impact of the proviso? I'll tell you. They're saying that, simple to understand. They're saying that if there is a supplier of goods, which means I'm a dealer of mobile phone, and I also have some interest income. Interest happen to be what type of income? It is an exempted service income. interest is in consideration for the launch services. Now, if I am someone who's having a mobile shop, also I'm having some interest as my income, then it will see like this: I'm providing goods, I'm providing launch services. Now, effectively, when both goods and services are there, since they are happen to be in what state? Since they all happen to be in a since they all happen to be in a general category state, and if they have goods and services, their limit will be 20 lakhs. So this was the problem. Just because I'm receiving some interest income, my limit was going to be 20 lakhs. So there they have made a proviso amendment. They said a person who is exclusively making intrastate supply of goods can avail 40 lakhs limit even if he is providing services by way of extending loans, which means if I have interest income, will I include that in the aggregate turnover? Yes. But what limit I should apply? If I'm in general category states making only intrastate supply, and I have supply of goods, and I have only one additional services, which is giving loans and getting interest, then your limit will be still 40 lakhs. This could be an examination question. So which means that should I include that interest in aggregate turnover? Yes. Second question that you have is whether what limit will be applicable. 20 lakhs, should you consider supply of goods and services, or you should consider exclusively goods? You should treat it as par with exclusively goods. 40 lakhs limit will be applicable. So I've given you an example also here. Now if you look at it, what if I have another type of an exempt income? Instead of having interest income, say for example, I'm a dealer of mobile phone, I also have an education service which is also exempted if you look at exemption. But what you have to understand here is that since you have another services, now your limit, aggregate turnover computation is same. Interest and mobile phone turnover you will add, education service and mobile phone turnover you will add. But what you have to understand here is that your limit will be 20 lakhs here, not 40 lakhs. 40 lakhs limit benefits will be applicable only if you have interest income. So this is the next understanding that you need to have. Now let's quickly look at what are the other sections that we have in registration. So this is something that I've already told you. Section 22 is applicable only if you have intra, but services you have threshold even for inter, and for handicraft goods you have threshold applicable for inter. All other things, it is section 24 applicable. So what is section 24? We will quickly have a look at. Section 24 is compulsory registration. Here it means even if you're having just 1 rupee turnover, you will still have to take registration in certain cases. So what are the cases where you have to still take registration? We will try to understand that. So first one, interstate supply, we have already understood. Then person required to pay tax under RCM. What is understanding of this? If there is a person, say, I'll give you two examples, which is straightforward and easy to understand. Say, suppose I'm a company, I'm a private limited company. I recently started operating and I have appointed an independent director. I'm paying him sitting fees. Question in your examination ask whether this company, since this company is not having turnover above their limit, the company is arguing that they're not required to take registration. Should they take registration? Yes, because when they make payment to a director, it is coming under RCM. Now the director is providing services to a body corporate. Since they are coming under RCM, section 24 will be applicable. They'll have to take mandatory registration. Then CTP, NRTP will have to take mandatory registration. And e-commerce operator, what are the things that we have for e-commerce operator? Very simple understanding. So e-commerce operator, if you understand only registration aspect, that is sufficient for the exam. You don't have anything else. So electronic commerce operator is like your Amazon, Flipkart and everything. Every e-commerce operator who are liable for TCS, very important point. Not every e-commerce operator. E-commerce operator can be anybody who's running a website could be an e-commerce operator. But should they all take registration? No. Every e-commerce operator who's selling third-party product, that's when they'll have TCS applicable under section 52. They'll have to take mandatory registration there. So not every e-commerce operator, we have an additional condition. E-commerce operator who are liable for TCS also will have to take mandatory registration. Then person who is supplying goods or services through such e-commerce operator is also liable for registration. So here, even though I have written goods and services, there is a notification which says that if there is someone who is supplying service through e-commerce operator, they also will get the threshold limit. Okay, there's a notification on that. So which means if I'm a supplier of goods, I'm selling through Amazon, my turnover is only 5 lakh, mandatory registration. Then e-commerce operator who are coming under 9.5 like Uber, mandatory registration. TDS person, mandatory registration. ISD, we don't have ISD to learn, but mandatory registration is there. Then para 3 agent, mandatory registration. OIDAR, mandatory registration. So that's all you will have to understand for OIDAR cases. Okay. So who's not liable to take registration? Section 23 says that there are certain persons who are not liable to take registration. Who are those people? Even if their turnover exceeds 10 lakh, 10 crores, 20 crores, 30 crores, 100 crores turnover, but I need not take registration. I'm running a petrol pump, fully, completely exempted. So person exclusively in the business of supply of goods or services, exclusively in the business of supply of goods or services, which are not liable, like HP man. Okay, HP man, you remember, high speed diesel, petroleum, motor, spirit, aviation, turbine fuel, natural gas, them, and alcoholic liquor. These two people are called as non-taxable supply. Then exempted supply. I'm only supplying goods or services which are completely exempted. So no need to take registration. Then agriculturist, individual or HUF agriculturist to the extent of supply of produce out of cultivation of land. So if I'm a farmer, I'm using only my labor or my family labor. Then my whatever produce I do, even if that exceeds the limit, I don't need to take registration. If I'm completely under RCM, say I'm an advocate, all my supplies, my customer will pay taxes, which means my recipient will pay taxes, then I don't need to take registration. So here is where you will have few questions this examination that might come up, which is there is procedure, and there is few additional aspect they have added here. So everybody who's liable to registration will have to take registration within 30 days. An effective date, if they apply within 30 days, it will be the date on which they are liable for registration. If they don't apply, when they are getting the certificate, there is an effective date rule as well. Now in the procedure they have added, so procedure was very straightforward and simple. You first generate a TRN, then you will convert it into an ARN, and then officer will have to approve. And there was an amendment which said that when you are applying for GST registration, bank account details is not immediately required. Bank account details are can be submitted 45 days from the registration or the next 3B date. Okay, so before the next 3B date or 45 days from your application, you can again give. So this was a convenience that was given. Now earlier, what you have to understand is that within 3 working days, if they don't approve, the officer is not approving within 3 working days, what used to happen is that you used to get deemed registration. Now they have put an additional aspect here. They said you will have to do an Aadhaar authentication. Now, if you do an Aadhaar authentication, this 3 working days of deemed registration will be applicable for you. And if you don't do an Aadhaar authentication, then instead of these 3 working days, they have added it with 21 working days. Okay. So there is a mechanism where the officer will check it. If the officer is agreeing with it, they will accept it. If they don't accept. So let's quickly look at Aadhaar authentication, because that becomes something that they can ask you this time. So what is that Aadhaar authentication provisions that we had? Okay, I'm going to quickly show you that portion. Okay, I've separately written this Aadhaar whole procedures, okay, for easy understanding. So they have added an additional procedure. They said, except for notified cases, Aadhaar authentication is mandatory for new registration. So all new registration, you'll have to take mandatory Aadhaar authentication. And your deemed registration of 3 working days is applicable only if you have Aadhaar authentication. Otherwise, it will be 21 days. Okay. Thereby, your date of application, you can say that your application is done only when you do the Aadhaar authentication or 15 days from submission of part B of your registration. So you apply for registration and you finish all the procedure. You cannot say that you have applied within 30 days. When can you say? Only if you do an Aadhaar authentication. When did you do the Aadhaar authentication will be your date of application of registration. If you're not liable for other authentication, then 15 days will be the from the date of submission of part B will be your application date. Now, if the applicant does not do the Aadhaar authentication, it's even though it's mandatory, if they don't have Aadhaar, or the cases they fail to do Aadhaar, then they will give you registration only after the physical verification of the premise. And once they do the physical verification, they will have to upload the details of your premise. By this, who has to do? The officer has to do. But they have said some people need not do the Aadhaar authentication. One is in person outside India, because they might not have an Aadhaar, because we have NRI registration and all that. So NRTP, you remember? Then other than individuals, so there are 4 classes of people who are liable to do Aadhaar authentication, like individuals, authorized signatories of all types. Like say in a partnership deed, if there are 20 partners, not every partner will have to do Aadhaar authentication. Only the authorized signatory will have to do. Others need not do. Similarly, managing and authorized partners will have to do. Then Karta of HUF has to do. Other than these 4 people need not do any Aadhaar authentication. So these are the additional points that you had. Okay, now let's look at the next topic. CTP and NRTP. So if they're going to ask, I'll tell you what kind of a question can come in CTP and NRTP. Again, same pattern of question. One is that they can ask you an MCQ question on any of these areas. They have a special provision. There were examination where they have asked a question which would be like, write a short notes on CTP and NRTP, which is very unlikely for you to come. Or they can ask you a scenario based question wherein they'll say that, okay, they'll give you a person as a cash or taxable person, and they will be claiming that they don't need to advance deposit, and then you will have to explain. So all these CTP and RTP, you will have to understand the whole provision. You should be able to ideally write some kind of a definition of CTP and NRTP when you're appearing for the examination. So casual taxable person, what's the difference between CTP and NRTP? Both of them are not taking a permanent registration. They're taking a temporary registration. And both of these people are having an occasional supply, not permanent supply. Now, what's the difference between these two? CTP will be an Indian who has an Indian residence, and he will be definitely having a PAN. But NRTP is not even having a PAN. This is the difference between these two. But in an exam, we cannot write those. We have to write that casual taxable person is a person who is occasionally undertaking transaction involving supply in the course of furtherance of business, because he's in India doing some business, and he's doing in a state where he has no permanent business. Similarly, NRTP is someone who is occasionally undertaking transaction involving supply, but he has no residence, no fixed place of business, entirely in India. In case of casual taxable person, we use the term state. Here we use the term India. That's how the differences would come. Now, what are the common provisions that we have? Validity is up to 90 days, extension for another 90 days. You have to apply. Normally, you'll have to apply within 30 days. Here, you'll have to apply 5 days prior to commencement of your business. And these people will have to do advance deposit of taxes. So you should be able to remember this chart. Unique identity number is taken by UN and then notified people. The major point that you have to identify about UIN is that it's a centralized registration number, centralized one. Normally, the registration is state-wise. Here, it's centralized. And the one who's having UIN is taking UIN. There's a unique identity number that is taken only to get a refund of the taxes paid on purchases. So these people are not considered to be taxable person, even though they are registered, but they're not having normal registration. They're having a UIN. And it can be given only after the ministry approval. If you want to amend the registration, section 28 talks about amendment of registration. If you want to amend the registration, if you want to amend the core field, which means an important field, you will have to take approval. And 15 days is the time limit that you have for all that. Then non-core field, other than non-core field, they themselves can make the adjustment. Then cancellation or suspension of registration, which can also be an examination question, because registration is one area they can ask one of these questions, and we know what kind of questions can come. All practical theory question can be, and it might look like a new question. Okay. If time permits, I will look at questions as well. Okay. I know that few of them are asking me to look at questions. I'm going to do that as well. So I have a target time for each chapter in my head. If it works, then we will look at that. If it's not working, let's okay. So cancellation can be made by the person who has applied for registration. Cancellation can be made by the officer also. We call it a suo motu cancellation. So cancellation done by me, cancellation done by a registered person could be when I stop the businesses. I am no longer liable for registration. I sell my business to someone. There could be a lot of condition. Or if there's a sole proprietor and he died, and his legal heir has to go and cancel his registration. 30 days application and all that. The important point there you have is, when you're canceling your registration, it stands suspended from what date? So there's something called suspension they have introduced. What do you mean by suspension of registration? So the moment your registration is suspended, they cannot make any taxable supply during that period, and they need not furnish any return. So I apply for cancellation. When will it stand suspended? Date of application or date on which I am asking for cancellation, whichever is later. So one trick for the examination I'll tell you. So you will have confusion. Some cases where you have to take a date whichever is earlier or whichever is later. Only one area it will be whichever is later. Cancellation. In case of suspension, it is whichever is later. In case of final return, okay, GST 10 final return, 3 months from the date of cancellation, or the date on which order of cancellation, whichever is later. So whenever it comes to cancellation, it is whichever is later. That is something that you have to remember. So registration deemed to be suspended from the date of submission of application or cancellation is sought, whichever is later. So the date on which I apply, if I apply today, so for cancelling cancelling with effect from a previous date, I can apply today. Or I can apply and say that, okay, I wanted to cancel from July 31st. So whichever is later, that date onwards, your registration is suspended. Okay. Now, whenever I say suspended, you might still have the applicability of revised tax invoice and first return. Understanding is this: revised tax invoice and first return will come like this. Say I applied for cancellation and my registration is suspended. What if I did not get the cancellation? The officer rejected my cancellation request. So during the period of suspension, now I was supposed to pay GST. So what I have to do, after my cancellation application is rejected, I will have to file a return and then pay taxes on this period of suspension. That's why they're saying that revised tax invoices, during that suspension period, if I don't get cancellation effectively, I'll have to issue a revised tax invoices, because I would not have made any GST invoices there. Then after I get a rejection on my cancellation, during the suspension period, I'll have to pay taxes. So first return, reverse tax invoice has to come. Okay. Then suo motu cancellation by proper officer. Officer has to cancel. So how will the officer cancel? Let's try to understand that also. 4 cases. Okay. Then there is a contravention of provision. There are 3 cases. Then you're not filing. So this can be repeated in a question. Not filing returns for a continuous 6 months. Not commenced business within 6 months from the date of registration. Then you're obtained the registration by fraud. In such cases, what they'll do, within giving you a shock cause notice with 7 days time, they will give you time to reply, and if your reply is not correct, they'll cancel your registration. But within 30 days from the order of cancellation, you can still ask for a revocation. Now, in that revocation case, you have an additional criteria here. What is it? So that is why this 6 months not filing of return is relevant for you. Say, if you don't file returns for continuous 6 months, that is 3 tax period for CLS cases, because they are quarterly filing. So not filing returns for continuous 6 months, they canceled your registration. Now you wanted to revoke the cancellation. So you wanted to request that, please revoke the cancellation and restore my registration. So in such cases, first you will have to go file your return, because your registration was cancelled because you did not file the return, right? So they're saying that cancellation due to failure to furnish the return till cancellation to be filed before revocation application. Means what? Till the time your cancellation, till the date on which your till cancellation that has been done, you will have to first file the return. Okay, which means that till the order of cancellation, you will have to file the return. From order of cancellation till you get it revoked, again, understanding is this: they have cancelled my registration because I did not file return for a very long time. Till that date on which you have not filed return, first you file, then apply for a revocation. But when you're getting it revoked, there is another period on which you have not filed the return. That you will have to file within 30 days after you get the revocation. So this is important for you to remember. So connected questions can come. Now, what are the other amendments that you had which becomes relevant for you? There might be 2-3 questions in GST. Since you have 28 marks of full length questions, it becomes very important for you to pick up these smaller areas where they can connect and then ask a question on. Okay. Okay, now let's look at, since we have asked for questions. Let me quickly show you a couple of type of questions in procedure area. So you look at this question. So this came in one of the RTPs and looks like a question that we can put you in the main exam. So they might give you a date on which they have commenced the business, the date on which the turnover exceeded 20 lakhs, turnover exceeded 40 lakhs, then application for registration made, and then registration certificate is granted on. So this particular question will become relevant in couple of scenarios. One is, you will have to, depending upon which state they are in. Jammu and Kashmir is in general category, even though there is reconstitution and all that has happened, they're still in general category. And you will have to understand it will be 40 lakhs that will be applicable for them. Now you have something called as revised tax return in your return chapter, which we will look at. So together with registration, they can ask a revised tax return question as well. So you don't need to brush through your notes at this point. Just listen to me. That will be more than sufficient. Whatever that you're getting, enough. So that's, I'm telling you, it's all bonus. So revised tax invoice, there's an invoice called as revised tax invoice. What is this revised tax invoice? It is issued from a period from effective date of registration and date of issuance of certificate of registration. It means only this. Revised tax invoice will be applicable only if they have applied for registration within 30 days time. Because the moment you apply for registration within 30 days of your commencement or on the date in which you became liable for registration, then your registration stands given. You will be treated as registered from the date on which you are liable for registration, right? Okay, so which means that if I'm liable on 1st of July and I apply on 10th of July, my registration will start from 1st of July, but I will get my GST number only on 15th, suppose. So there's a 15 days time I am registered, but I did not have my GST number. So I cannot give GST invoices. So after this 15th, within another 30 days, I'll have to come back and then revise all the invoices that I have during this particular period. This is the understanding that we have. So this revised tax invoices will become relevant in case of registration. So they can club a question. So in this particular question that I have just shown you, Lavakush Private Limited Srinagar is having, they've exceeded their turnover on 40 lakhs on 5/9, and they've made application on 28/9, which means within 30 days. So they will be registered from 5/9, but they got the registration certificate only 6/10. So from 5/9 till 6/10, they will have to issue a revised tax invoice. This will be the answer. Now, this revised tax invoice also, there is an few additional criteria that we have. During this particular period, if they are issued to unregistered recipient, we can combine this revised tax invoice and then issue a consolidated one. But if it is interstate and more than 2,50,000, then they'll have to issue a separate revised tax invoices to all of those people, which comes back to our discussion on GSTR 1, which I feel like this time, since there is 36.4 and all they are asking in final level, they've already tested that. There could be a question on that. So let me, from here, let me jump to 36.4 and GSTR 1 and GSTR 3B. Okay, let's quickly look at that. So basically, there are two returns that one needs to file. One is GSTR 1, another one is GSTR 3B. These two are the returns that we have. GSTR 1 is in section 37, GSTR 3B is in section 39. Wherever we are saying section 39, it means GSTR 3B. First understanding is that who has to file this return called as GSTR 1. Every registered person has to file GSTR 1, which will show their outward supply details invoice wise. Okay, invoice wise. That's the crux of that particular point. Okay. So when they are filing GSTR 1, I'll show you a few more. I'll show you different notes so that it can easily be. Okay, let me talk from this itself. So monthly they'll have two returns. One is GSTR1, another one is GSTR 3B. So together with GSTR 3B, you have to think about payment of taxes. So they are making payment on 20th. So 3B deadline is also 20th. GSTR1 is just a return. There is no payment. It's just giving their outward supply details in a return. So who has to file GST1? When who need not file will become an important one for you, because you can remember who's not required to file GST1. So you have to think that nobody who's having persons who are registered but they're not having outward supply, like TDS person, TCS person, they're all doing TDS, TCS, OIDAR persons, uh, then composition levy person, because there is no relevance for him to file invoice wise details because he's paying taxes on the turnover. NRTP, because he has a separate return. Input service distributor, all of these people need not file GSTR1, except that, including your casual taxable person, everyone files GSTR1. If their turnover is less than or equal to 1.5 crores, they'll file it quarterly. Now there is an option, they can file it on quarterly basis. And if it is more than 1.5 crores, they'll have to file monthly. And the return due date is 10th of next month. Okay. Now in GSTR1, what you have to importantly understand is that when you're filing these details, you will have to actually give invoice wise details inside it. That is what I was trying to look at. So I'll show you a quick understanding on that. Say in GSTR1, they'll have to give, you have two type of invoices. One is B2B, registered to registered. Another one is B2C. In B2B, you will have to give invoice wise details. Each invoice has to be uploaded. In B2C, you'll have to again see if it is B2C intrastate or interstate. If it is intrastate, you have to give rate wise. If it is interstate, again we classify them B2C small, B2C large. Here you'll have to give state wise, rate wise. If it is B2C large, you'll have to give invoice wise. I'll tell you what exactly is this, and then there is an RTP question on this which we can look at. So if I'm someone, I'll be keep making a lot of supply. Now when I'm making a lot of supply, in GSTR1, I'm supposed to give all my invoice details to the government. So how do I upload? If it is registered person to registered person, we call it as B2B. All the invoice wise details has to be given. If it is registered, I'm making this supply to an unregistered person. If I'm making supply to an unregistered person, then I'll have to see whether it's an intrastate supply or an interstate supply. If it happens to be an intrastate supply, I don't need to give invoice wise details. I can club it. If it is interstate supply, then I will have to look at if it is a small supply or a large supply. What do you mean by large supply? It should be more than 2.5 lakhs. This is important because exact 2.5 lakhs is not considered to be large. It is considered to be small. So if I make a supply from Kochi to a person in Chennai, okay, from Kochi, I make a supply to a person in Chennai. I need not, and the value happened to be 2,40,000. I don't need to upload the invoice details. I can club it, and together with all other invoices, I can tell my whole value in a month. But if that value happens to be more than 2,50,000, I will have to show that separately. So since there is an upload that has to happen in GSTR1, based on this GSTR1, your credit allowability is restricted. What does that mean? So you have to understand that you make purchases from, I'm a registered person, I make purchases from different person. And in a question, I'll tell you how a question can test this. Normally, you know that there could be a question. One type of question that you have for examination that you could be having is net GST computation. What is the meaning of net GST computation? You will compute what is the outward supply. We have three-part computation. First part is computation of your outward tax liability. Then you will compute what is your input tax credit. Then you have a third part which is called as net GST computation, which I'll I'll look at a couple of questions right after this. But when you're doing that, now they can give you an additional working note saying that this particular input tax credit, out of the input tax, out of the purchases that you have, out of 100 invoices that is being shown on intrastate supply, only 80 invoices are reflected in GSTR 2A or 2B. There is an additional word called as 2B is given. So no relevance of that. But if the question is having an additional reference to 2A or 2B, what you should do, I'll tell you. Carefully listen to me, and you have to do this treatment. So for all the invoices, say 100 purchases I have made. When will I pay GST? Only if these purchases are from registered person. So I made 100 purchases, and out of this 100 purchases, 50 purchases. So I will have a total value of my purchase in the question. So they'll say that your inward supply is about inward supply value is about 10 lakhs, and GST on inward supply is 1,80,000. They have given in the question. Now, next line, they are giving you an additional wording, say that for this 10 lakhs of inward supply, there are 100 invoices. So 100 invoice, 1,80,000 credit. Out of this 100 invoices, 50 invoices are reflected in your GSTR 2A, which means they have the other supplier from whom you have purchased, they have uploaded 50 invoices. Now, this 50 invoices, you can take the credit. There is no problem. What about the balance? 50 invoices, you can take the credit. What about balance 50 invoices? You cannot take the credit. But they're not saying that completely you cannot take. They're saying that out of this 50 invoices, say whatever invoices that you can see on 2A or 2B, the value, total value is 1,80,000. So value of these 50 invoices GST credit is 1 lakh. Now you can take another 10%, which means 10,000 additionally you can take. So your credit is limited to 1,10,000. This computation you might have to do. So when you're doing the computation, so if you remember, we do the computation like this. Computation of net GST, you do a table. You will have value CGST, SGST, IGST. Part A, you have outward tax liability. You do a total. There is no change in this. Part B is computation of ITC. You have intrastate supply, you have interstate supply. You have written all that. So you have ITC total. But after that, you have to say out of this total ITC, how much is the eligible ITC under section 36.4? What is that 36.4 says? How much is reflected in 2A or 2B? Say out of your GST credit, suppose your total GST credit happened to be, say, 60,000, 60,000, 60,000. Out of that, you're computing eligible credit. 50 invoices is available. Say 30,000, 30,000, 30,000 is available. 10% additional, 3,000, 3,000, 3,000. So your total credit that you can show here is only 33,000. Even though your total ITC is 60, 60, 60, you can only take 33, 33, 33, because they have said if it is not reflected, if it's not reflected in your 2A or 2B, then you have to restrict it to 10% of eligible credit. So this, be careful. And since this has been the pattern, final they've already asked last examination. So this exam for inter, they might do this trick. So be very careful for this examination so that you can understand this. So the provision notification says that you don't need to write the notification number and all that. No need. You write as per rule 36(4). You have to write that if the invoice or debit note has been uploaded by supplier in his GSTR1, you can take full ITC. If so, you have a set of conditions to be satisfied for ITC, that is mandatory. After that, I'm telling you, where invoices is not uploaded by the supplier in his GSTR1, you can take 10% of the eligible ITC, whatever you have. This is the maximum that you can take. So there is an example question that we have given. Total ITC is, there are 100 invoices and GST is 10 lakhs. First case, 60 invoices with 9.5 lakhs is available. So 9.5 lakhs you can anyway take. 10% of 9.5 lakhs is 0.95 lakhs. But your total eligible ITC itself is 10 lakhs. So there, in that case, you can take full 10 lakhs. But if 80 invoices are available, having ITC of 6 lakh, 20 invoices is not yet reflected. Why it is not reflected? They have not uploaded because they might have opted for quarterly filing or things like that. So that cases, they will have, you can take only 6.6 lakhs. So this 10% computation you have to remember. Okay. This is what is the important aspect that you might have for your examination. The next thing that you have to remember is, in your GSTR1, how many you have to show it as separate invoice, how much you can club it and show it as a consolidated rate-wise amount. So if it is B2B, registered to registered, intra or inter, you'll have to show it separately. If it is B2C, only B2C large, you'll have to show invoice-wise in interstate. Okay. So interstate more than 2,50,000, more than exact 2,50,000, no need to show separate invoice in your return, GSTR1. So I'm taking this first because I'm pretty sure you guys are not going to reach revising this in this clarity when you're doing it tomorrow. So I thought I'll finish off this so that even in the late night, we are reaching at areas of charge or composition levy. I'm pretty sure that you will be still able to read it tomorrow. You'll reach there. Okay. Now, few latest amendments came in, and one I'm expecting for them to test if they want is HSN code. You already know what is HSN. Now earlier they have SAC, HSN separate name and all that. Now they are using HSN code for both service and goods. So when you are preparing an invoice, they have said you have to show one additional column for every goods. You will have to say what is the HSN code, what is the classification of this goods. HSN code is an 8-digit code. So each goods in India will have an 8-digit code for identification. Now, whether everybody will have to mention all 8-digit of their product in the invoice itself, they said that is depending upon what is their turnover. If they are making, first of all, you should understand, if you are a customer, B2C, again, B2C, there is no mandatory requirement for you to know HSN is mandatory in case of you're supplying to an unregistered person. Okay, up to 5 crores, there's no requirement. But if you are supplying to a B2B, business to business, up to 1.5 crores is your turnover. All this turnover is last year turnover. Are you a small person? Your turnover is less than 1.5 crores. There is no mandatory requirement for you to show HSN of your product. 1.5 to 5 crores, 2-digit. More than 5 crores, 4-digit. This has been further changing. This is an amendment. That's why it's relevant for you. MCQ question. No, very relevant and all that. This is something that they have not asked. E-way bill is something that they're not. So there were some questions. I understand. I'll take up these questions in the end. Okay, I don't think I'll be able to answer all the queries and then go with the revision. So I'm just going to do. So please stay till the end. I'll finish off at like 11:45. So till then you be there. I'm going to give you an in between break because I have to do a snack, but you don't take that break. Okay, you just continue. You can, if you want to eat, you can just keep your mobile or laptop next and then start eating and watching it, because I'm just asking you to be relaxed and sit there. Okay, so e-way bill is something that they're not asking quite a while, but if they are going to ask e-way bill question, we know that where the question is going to come. And one additional area of e-way bill is this, which is going to be relevant for you. I'll just quickly brush you through e-way bill so that you don't need to bother about reading e-way bill again tomorrow. So one set of question that they're going to ask is when you should issue an e-way bill. The e-way bill is for transportation of goods. This is something that you should already know. Transportation of goods, you have to issue e-way bill. There is a limit beyond which you have to issue an e-way bill, which is 50,000 consignment value. Here the consignment value means value of goods plus tax. So if I transport, okay, there is no kilometer limit and all that. If I transport above 50,000 worth goods, be it a transfer to my own branch or be it a sale to a person, I will have to issue e-way bill. Now, see, if I transport goods worth 45,000 with 18% GST, then also I'll have to issue e-way bill. Why? Because consignment value includes taxes. Remember that. Okay. Two cases, even if there is no, even if the product value is less than 50,000, they have to issue an e-way bill. One is when you're doing a job work transfer or if you're doing a transfer of handicraft goods. Here, 50,000 itself is not required. Next is who has to issue an e-way bill? Registered person will have to issue an e-way bill. Registered person causing movement of goods. If both of them are registered, then the person who is arranging the transportation will have to issue the e-way bill. If both of them are unregistered, but the value of the goods is above 50,000, then the transporter can issue the e-way bill. Now, these are not going to be tested that big in your syllabus or at intermediate level. But if they are testing, they're going to test either of this. What is the validity of an e-way bill? This has got amendment. That's why I'm discussing this. An e-way bill is valid up to 100 kilometers. If your transportation is up to 100 kilometers, it will be valid for 1 day. For every 100 kilometers, you will get one additional day. So if I'm transporting, I'm creating an e-way bill today, the goods has to reach the destination by tomorrow midnight. 1 day from today's midnight, I'll get. So if I'm generating at 8 o'clock on 10th of July, my e-way bill has to reach, sorry, my product has to reach to the customer by 11th of July midnight, 12 o'clock in the midnight. That is the time limit. But if the kilometer happen to be 150, then I'll get 2 days. So it'll be 12th midnight. Okay, that's how it will compute. But if the product is taken in an over dimensional cargo or like it involves shipping and all that, it involves sea transportation, then for every 20 kilometers you will get 1 day, and every additional 20 kilometers or part you will get an additional day. Okay, so this is all you have. But e-way bill is something that you require for day-to-day function. So to ensure that these people comply with GST properly, they have put an additional provision. This is the provision. They'll block your e-way bill when no person will be allowed to fill part A of e-way bill, be it supplier or recipient, for following reason. If you're a composition levy person or a 10-2A person and you have not furnished CMP 08 for 2 consecutive quarters, 2 quarters you don't file CMP 08, or if you're a composition person and you did not furnish the statement, you cannot generate your e-way bill. If you have 2 consecutive period, you have not furnished 3B, then your e-way bill is blocked. If your taxpayer has not furnished GST R1 for 2 consecutive months or quarters, when they'll have quarterly filing of GST R1, if their turnover is less than 1.5 crores, their choice. If you don't file, so what you have to remember, 2 months period, if you don't submit your returns, then you cannot generate e-way bill. So your business is blocked there. You're not able to do the business there. You're understanding the problem there. Okay. So, but if it is a genuine case, the commissioner can specifically allow you. So these are the things they have not tested. So I'm scared if they go to the, if you go to the exam and you might have these things of as a question for you. Okay. Okay. Now let's quickly run through your area of invoices, what is left out. So you already know what are the type of invoices that you have. So if they want to ask questions, they will be asking from these. You know what is bill of supply? Who will be issuing bill of supply? So there are documents. Document summary is this. So what are the documents that you should remember for the examination? First one is tax invoice. Second one, delivery challan. Third one, bill of supply. These are the three documents. Then you have revised tax invoices, credit note, debit note, and all that. But these are the prime documents that you have. What is the difference? Tax invoice means all of this only a registered person. All document that we mention in GST is relevant for a registered person in the GST. Tax invoice means you're making a taxable supply. Plus, you're collecting taxes. Delivery challan means you're a taxable person and it's not a supply. You still make a transfer. Okay. Like there are two branches, they're not separately registered, you move goods. If they're separately registered, it becomes a supply, then they'll have to issue a tax invoice. Bill of supply is when you're a registered person, you're making taxable supply, but you're not collecting tax. When you will not collect tax? When you are under composition levy scheme, you're not supposed to collect taxes. You have 10-2A scheme, which means you're under the scheme where service providers, or if you're not able to choose composition levy scheme, you can actually choose the special concessional payment of taxes 6%. If you're under that scheme also, you cannot collect taxes from your customer. So in such cases, you will go ahead and then issue a document called as bill of supply. Very important point. In case of bill of supply, you will mention in the bill of supply that you're not collecting taxes from the customer in those two cases. Here I've said notification 2, but this has been replaced as 10-2A scheme. Okay, whenever you're writing in the exam, the service scheme has to be mentioned as 10-2A. Now, third one, I'm a registered person. Say I'm a supermarket. I have some product which is exempted, some product which is taxable. So what will be the case in that kind of a scenario? I cannot always separate. No, I have somebody purchased 10 product. They are in the cart. I cannot separate. No, so in such cases, they have said you can issue something called as invoice cum bill of supply. Okay, so you will separately mention what is exempted product and what is the value of taxable product in your invoices. So you can combine and then issue. Otherwise, you are an if it is unregistered. Okay, if the customer is not registered, then you can issue something called as invoice cum bill of supply. And if I'm registered and I'm supplying an exempted goods, I will not collect taxes from the customer. That's where I'm issuing a bill of supply. Then there is another invoice provision called as consolidated tax invoice. Remember, consolidated tax invoice is different from consolidated revised tax invoice. Consolidated tax invoice means small value purchases is happening. And what you're going to do? In the examination, how they'll ask? They'll say that there's a person, okay, there's an RTP question on consolidated tax invoices. They ask the question whether it is required to issue invoices in all the cases. Whether it is mandatory to issue invoices in all the cases. The provision could be answered like this. We can talk about consolidated tax invoice. How? If the value is so less and if they are unregistered and they don't need an invoice, if they ask, we'll have to anyway give. In such cases, there is consolidated tax invoice, which means that you can issue the invoices at the end of the day, keep it with you. Okay. So three conditions to be satisfied. Recipient does not require, value should be less than 200. So there are certain cases where they have not including that particular 200 there. So they're saying that if the value of your invoice is 200, then you will have to issue an invoice. The value is less than 200 and the recipient is unregistered and they're not asking for invoice. At the end of the day, you issue a common invoice for all of them and then keep it with you. But this facility cannot be given for multiplex tickets. You cannot issue a consolidated ticket for everyone. You have to issue separate. So this is something that they have added additionally as a case. Okay. So there has been question on this. They have given you like 5-6 invoices and they said which are the things you can consolidate. So you'll have to check for the value. You'll have to check if it is B2B. Only B2C can be having a possibility of consolidation. Okay. So exam questions that, see, I'm rushing you this so that you can look at the questions in our practice manual. I will give the link of the practice manual. If you have not attended my classes earlier, you can look at those questions and answers I will give. We know that when you get an advance, you are supposed to give a receipt voucher. And if you're giving back the advance, you will issue a refund voucher. Debit note and credit note is section 34. Section 34, important. Now, section 34 is important for one reason. They can, there's been some tiny amendments here, which they can test. Common understanding is very simple. You should be already knowing this, but still, invoice is already issued by supplier. Now later, I wanted to increase value or tax, or I wanted to decrease value of tax. If I want to increase value of tax, what will I issue? Debit note. If I want to decrease value of tax, I'll issue credit note. Also remember, your cases of credit note has a time limit. What is the time limit? Same as your time limit for claiming 16.4. Claiming ITC, there's a time limit. Now, what was the time limit? Your due date of filing return under 39 for September next financial year, or date of filing annual return, whichever is earlier. You remember 16.4, there is a timeline. That will be the timeline for credit note. So credit note is when you want to see what happens when you issue a credit note. Whatever tax you've already paid gets reduced because your value gets reduced or tax get reduced. But when you're issuing a debit note, the ITC is claimed by the other person. So ITC, there is already a limit. So that's why you have only a time limit in case of credit note. You remember this. Credit note time limit is same as ITC time limit in 16.4. Now let's quickly look at the notes that we had there. So we know that debit note is also called a supplementary invoice. You should be able to write a few notes on that. Credit note can be issued when goods are returned or goods or service are found to be deficient. Okay, 20th October next financial year. Okay, so this is what I meant by due date of filing return under section 39. 3B return date, September next financial year, or date of filing annual return. Same is there in 16.4. When can I claim ITC? Maximum by 20th next financial year or date of filing annual return. Now in now in payment chapter, if they are going to ask question in this exam, okay, please listen to me for another 10 minutes carefully, because I'm going to discuss an area which I feel there is a more than 60% chance of in your examination when you're going to write it day after tomorrow. And I'm going to solve a question itself here because I'm finding it very important. Section 50, it had an amendment long back. But now Section 50 amendment is effective, and I've given you like so many stars because I consider it to be 5-star question. Okay. Let's read this. Then I'll give you an understanding on this. Interest on delayed payment of taxes. In our notes, there would be two interests I'm talking about, 18%, 24%. 24% is not applicable now. That section is not yet effective. So delayed payment of tax interest right now is section 50. It is only 18%. Okay, this is something that you have to remember. Next question would be whether this 18% should I compute on what amount? Okay, what amount it should be computed? Whether it should be computed on outward tax liability or net GST payable is the question. There is a CBIC clarification after Finance Act 2019, which is not effective for you, not yet effective for your exam. But CBIC clarification is there. Thereby, they are saying that this will be applicable from this examination onwards, which means now you have to pay interest on delayed payment of taxes based on your net GST payable, but your provision is little clumsy there. What do you mean by little clumsy? I'll tell you why it is little bit of clumsy there. Okay, now carefully listen. I'll give you two examples. And there is very likely chance that you might have this on your exam. Right there, when you go and look at the question paper, ta-da, you have this particular question. Say, Mr. A, he has in January 2021, his outward tax liability is 2 lakh. He also has an ITC eligible of 1 lakh. You tell me on the chat box. Here I want you to interact with me. What is the due date on which they have to pay taxes to government? What is the due date? Twentieth of February, correct. So 20th February, if they pay, they will pay how much? They'll reduce the ITC. Let's assume this is only CGST computation. 1 lakh they'll pay. You guys with me? Suppose there is a delay in paying taxes. They paid it on 25th of March. There's how many days of delay is there? How many days of delay? So February, they have 8 days of delay. March 25 days. We will add both. So 33 days of delay, right? How much is the interest? How much will be the interest payable? How do you compute? Question is this, whether I should take it as 2 lakh into 18% into 33 days or 1 lakh into 18% into 33 divided by 365. Which one? What is the amount? Can someone compute? Okay. It should be on 1 lakh. Now I'll tell you an illustration question also, how where it can go tricky. So let me first write this. The answer is 1627.4. This is correct. So first thing that you have to understand that now because of CBIC clarification, so you'll have to go to your institute material, go to page 9.25. Okay, 9.25. Quickly go to 9.25. Let's read this and then try to understand. Okay, but my example is the easiest to understand. So 1627 is your computation. Your computation is correct. Now I'm asking you a support question. Okay. Suppose Mr. A for February month, their outward tax liability. So it should be on 1 lakh, which is correct. There is no confusion on that. It is on net liability. Okay. It is not on gross liability. It was still last exam. Now onwards, it is net liability. Now outward tax liability is 1 lakh. I have an ITC of 50,000. My net liability is 50,000. I paid on 20th March, which means I paid it correctly. Do I have any interest applicable? Interest applicable or no interest applicable? No interest applicable because I paid within the due date. Right? No problem. But later, March, I found out that later in March, I found out that there was $20,000 missing invoice to be reported, and ITC was missed to take for 1 lakh worth 1 lakh worth missing invoices to be reported, and missed to take ITC was missed to take for an invoice of 50,000, which means and Artham or 1 lakh rupees. Okay. What is the meaning of this? 1 lakh rupees worth invoice I missed to report, which means my outward tax liability should have been 18,000, 18% GST will assume. It should have been 18,000 higher. Same time, I should have had an ITC of 9,000. So 1 lakh worth invoice at 18% was missing. I did not show it. I did not add it to my outward tax liability. My ITC should have been 9,000 more because 50,000 worth invoice was also missing. I did not take ITC on that. So ideally my net GST would have been how much? 9,000 I should have paid extra. Now I realized this only in, this was paid in the month of April 10. So which month? These invoices belongs to February. These invoices are for February. Ideally March 20 I should have used this invoices. My March outward tax liability should have been 1,18,000. Credit would have been 59,000. My additional I should have paid 59,000. This is the correct one. But how much I paid? Only 50,000. But did I file my returns on time? Did I file my returns on time? Yes, I filed my returns on time. When? I filed within the due date. Now later I found out that there is a invoice that I missed to report. There is an ITC that I missed to claim. Now I have to pay this particular 18,000 and I have to claim this ITC of 9,000. Now question is this, ideally when I should have shown this particular invoice in February. So on this 18,000, when I now have to pay, I have an outward tax liability increase of 18,000. This should have been paid to government by 20th of March. When did I pay? By April 10th. In such case, I have to pay interest. Question is this, should I pay interest on 18,000 or should I pay interest on net 9,000? This is what I want you to comment on. So your answer should be, it is 18,000. It is on gross liability, not on net liability. This is the major understanding you need to have. When can I claim that interest on net liability? Only when you correctly report. In first example, okay. In our first example, we have correctly reporting and there is a delay of 33 days. So our computation of 1 lakh was correct. On this 1 lakh, you pay interest. But here my computation was wrong. If I have already filed my returns correctly within the due date, then your interest, if you miss out any invoices, then you will have to pay interest on the entire outward tax liability. This is the understanding. So this could be an exam question. Now let's look at how Institute is picturizing that question. Okay, so look at this particular question, all of you, from the book. Mr. Ashok, a registered supplier of taxable goods, filed GST 3B for the month of January. I'm in 9.24, okay, if you want to refer to your text. Mr. Alok, a registered supplier of taxable goods, filed GST 3B for the month of January on 15th of April. Prescribed due date of filing the said 3B was 20th February. The amount of net GST payable in cash, that is by electronic cash ledger, on supplies made by him for the month worked out to be 36,500, which was paid on 15th of April. Briefly explain the related provisions and compute the amount of interest payable. How much will be the interest payable? Since there is a delay in filing 3B, the interest payable would be on the net GST liability, that is on on 36,500, I'll compute 18% for 54 days. That is from 21st of February to 15th of April. But this is the next question we have. ABC Limited. ABC Limited have filed their 3B for the month of July within the due date prescribed under Section 39. That is 20th of August. Okay, July, they have filed within the due date. Post filing the return, the registered person has noticed during September that tax dues of the month of July have been short paid for 40,000. ABC has paid the above shortfall 40,000 through 3B filed on 20/10/2020. So they filed July return correctly within the due date. That they paid taxes of net liability only, but there is no interest because they paid on time. But they missed out 40,000 worth invoice. And when they are paying 40,000 invoice in 3B in the month of, when did they pay? On 20th of October. So they should have ideally paid it on 20th of August, but they paid it on 20th of October. Okay, there is that much of delay for this 40,000. But when they were paying, they used both cash ledger and they used credit ledger. They had a credit. Now, how much interest is payable by CGST Act? Okay, now let's look at the answer for that first part of the question. Now, how do you write an answer? Interest is payable under Section 50 in case of delayed payment of taxes at 18% per annum from the date following the due date to the actual date of payment of tax. No doubt. This is something that we can construct as a sentence. Then, as per the proviso to subsection 50, interest is payable on net tax liability paid in cash only if return is filed after the due date. There is a delay in filing return under Section 39. Then only I can compute it on net liability. In the above scenario, they have defaulted in making payment of 40,000 but they have filed the return within the due date. So thereby interest is payable on gross liability and 51 will not be applicable. They'll have to pay on the entire 40,000 for 60 days of delay. They'll have to pay what? They'll have to pay interest. Are you guys understanding this? This kind of a question can come. Now there is an alternate question also here. What would be your answer if GST 3B for the month of July has been filed belatedly on 2010 and self-assessment tax of 40,000 has been paid on 2010 by cash 30,000 and by electronic credit ledger 10,000. Now they are saying that here 3B is delayed and 3B itself is filed on 2010. At that time in that 3B they have utilized ITC. In such cases you will pay interest only on 30,000 whichever is paid by cash. Whatever ITC you have used, you don't need to pay any interest on that. Are you guys having full clarity on this? This could be an exam question. Can I have a quick yes on the chat box or the comment box if you guys are clear about this? Okay. Wonderful. So please ensure that you go ahead and then just have a look at this question and then try to understand how it has to be answered. Now I'm going to swap back to due date of invoice, which is also an invoice chapter area, which is connected with your time of supply chapter. Time of supply is one of the easiest chapters that we have. So nobody makes any mistakes in time of supply. So take your notes on time of supply, which is for me for a revision, it's 15 minutes. It should not take more than that. I know I can tell you what question they'll ask. Time of supply question, if you get two type of questions you can get on time of supply. One is three type of question I can tell you. One, And the third type of question is very less chance these days. They're not asking. First type of question is MCQ. In that one question, they dedicate towards time of supply. It should be in a scenario, they'll say, what is the time of supply of some of the cases? Okay. Second one, in a valuation question or in a time, in a question of, ITC computation, they include one, like one line, okay, just one additional cracker or topping. So they'll add additional topping to that and say that, okay, let me ask you a time of supply question also inside it. So these two are the things that you have to be watch out for. Time of supply is a straightforward provision, guys. There's not much that I can teach you. Okay, just quickly revise. In any question, time of supply section can be easily understood. How? If it is goods, it is section 12. If it is service, it's section 30. That's all you have to remember. So when you get a question, read it. Supplier supplied chemicals, goods. Supplier supplied machinery, goods, section 12. Okay, supplier provided architectural job. Supplier has given design service. Supplier has given testing service, section 30. Then subsection can be picked like this. If it is forward charge, 2, reverse charge, 3, vouchers, 4, residual case, 5, interest, enhanced consideration, interest time of supply, when interest in the time of supply, interest time of supply, penalty time of supply, that will be 6. Okay. But question on residual case and voucher is like impossible. They're not asking, it's too simple. Reverse charge, they're asking, sometimes they separate question. So there had been an exam where they've asked a separate question on time of supply and reverse charge mechanism connected. Okay. Anyhow, let's come back. I can talk to you about reverse charge mechanism when I'm taking the time of supply second part, so it will make relevant. Now, how do you remember time of supply? Easiest method, even if you don't remember the provisions when you go blank in the examination and all that, how do you approach it? If it is supplier, think about date of invoice. If it is recipient, think about date of payment. Supplier ആണെങ്കിൽ എനിക്ക് കൺട്രോൾ ഉള്ള ഇൻവോയ്സ് കൊടുക്കുന്ന ദിവസമായിരിക്കും മോസ്റ്റ്ലി. റെസിപ്പിയന്റ് ആണെങ്കിൽ കാശ് കിട്ടുന്ന ദിവസമായിരിക്കും. Now, but when it comes to supplier, they will have a due date. So that's what you have to look at. So forward charge mechanism, if it is goods, it is date of invoice or due date of invoice, whichever is earlier. Now, there are multiple exams where they have tested you with this. That is, what will be the time of supply if they are supplying goods and they received an advance? I'm a mobile dealer. I got an advance of 1 lakh. What will be the time of supply? Should I pay GST based on this advance receipt? Answer is no. So what they do in a valuation question, okay, I'll tell you how the question would look like in the exam. So there'll be a question like this. They'll say, compute GST for the month of March 2021. They'll say advance received for service to be, goods to be delivered in April, 2 lakh. Should I include this 2 lakh in the valuation? I need an answer on the chat box. Should I include? Should I not include? No, I should not include it. And the reason is because for advances, time of supply is only when I issue the invoices or when I do the delivery, whichever is earlier. So this is something that you have to remember. There are multiple questions where they're adding this additional thing inside your examination question. They'll say advance. But in the same method, they have said there is an advance received for supply of service to be received in, to be provided in April. To be provided in April. Should I include or should I not include? Yes, we will have to include, because in case of service, On advances, the date of receipt will be the time of supply. That month itself I'll have to pay, but in goods, I don't need to. So this differentiation is super important for your examination. Please remember, they can ask you a question on that. Okay. But how do you write an answer? They say you will talk about notification 66 bar 2017 and you will say that it is omitted. If you remember this notification number, beautiful. If you don't remember, no problem. As per the relevant notification, when your date of advance receipt is not at or time of supply for advance is as per date of invoice or due date of invoice. Likewise, you write a working note. That's how you should solve it up. Okay. Then, in case of service, you will have to understand if you are issuing invoice within 30 days, you will compare invoice and the receipt of payment. And if you don't receive within 30, if you don't invoice within 30 days, then it will be date on which you provided the service and then date of receipt of payment, whichever is earlier. Okay, so this is the time of supply. This is something that you would be knowing. So if it's service, first you identify it's a service or goods, then you check forward charge or reverse charge. They have not tested this part yet. They can say that State Bank of India provided loan processing services, and they can put a question like that. State Bank of India provided loan processing service. How do you go ahead and then answer that kind of a question? And they're asking, they have issued invoice. They provided loan processing services on 1st of July, and they have issued the invoice on 8th of August. What will be the time of supply? 1st of July, service completed, process, loan processed. Why am I taking loan processing? Because loan is not, interest on loan is exempted, but loan processing fee is taxable in case of banking. So loan processing fee, how do I compute time of supply? Instead of 30 days, I have to take 45 days. They have not tested this. So just keep a hold on this. Banking company, financial institution, insurance company and all, instead of 30 days, they have to issue invoice within 45 days only. Okay. Important another area where they're continuously testing in MCQ and confusing everyone is date of receipt of payment. What do you mean by date of receipt of payment? Which date you should take? Date of receipt of payment. In exam question, they'll say that some question or the other they put, and they talk about a very intricate area. They'll talk about Mr. Raju received cash on 5th of July, and the same was recorded in the books of accounts on 10th of July. What will be the time of supply? Raju received. Raju is providing service. Raju received, and it will be relevant only in case of service because date of receipt of payment is relevant only in case of service. Raju received advance on in cash on 5th of July. The same is recorded in his books of account only on 10th of July. So what will be the date of payment, or what will be the time of supply? Why time of supply question can be easily asked in an MCQ is that because they just have to give 4 dates. It's easy to set up a question. So date of receipt of payment, if it's cash, if it's other than cash. This is how practically in an exam question you can differentiate. If it's cash received, it will not be the date of receipt of cash. It will be the date of entry in the books. So whose books of account? Supplier. Because I'm computing for supplier. He's receiving money. Other than cash, then I have to check the date of entry and date on which I got the credit in my bank, whichever is earlier. I hope you're getting this. Okay, then there is some special due date, okay, which many people just leave this particular area. It's just continuous supply and cessation of services and then goods sent on approval basis. Very simple. Continuous supply of goods means goods are coming in continuous basis through a cable or a pipeline. So the due date of invoice will be the statement date. If it is continuous supply of service means services provided for a period more than 3 months. In a continuous supply, remember there will be part payment. What government is trying to do here is that for part payment, they wanted to keep a separate time of supply. And for each part, there will be date that they are going to pick. So if it is continuous supply of service, 3 months, more than 3 months services, and it depends on the contract. What will be the contract? There will be payment date mentioned in the contract. That date for part payment date will be the time of supply. That part payment date, wherever it is mentioned, you will have to issue an invoice. That will be the understanding that you need to have. But the other two is very simple. Cessation of services before completion. If you plan for 10 days of service and service get closed on 5th day, you said enough. Can I wait for another 5 days and then 30 days from there and then issue the invoice? They said no. If the service is stopped before the completion, then that date will be the due date of invoice, relevant for the time of supply. Then goods sent on approval basis. When you're sending goods on approval basis, what document will be issued? Can someone answer it on the chat box? Goods sent on approval basis means I'm giving a TV, it can be approved or rejected. So what document I'll issue when I'm sending it for approval basis? Can someone put an answer on that? Not below supply, Dwaj. Bill of supply should have a supply. Here, yes, delivery challan. I think Shivani has given the correct answer on the YouTube. Delivery challan is the document because there is no supply, because only when he accepted it becomes a supply. Okay, so bill of supply, I gave you the document summary. Bill of supply is when it's a supply, I don't collect taxes. Delivery challan is I'm transferring, it's not even a supply yet. You're getting it? So delivery challan is what I'll give when I'm transferring goods to him. But should I issue invoice in some time? They said yes, when he's accepting it. What if he's not accepting within 6 months? Then end of 6 months, you'll have to mandatorily give an invoice. That is the understanding. Now, you have a separate time of supply in case of reverse charge mechanism. Let's quickly jump on to reverse charge mechanism and then try to understand the cases where a recipient will be liable to pay taxes under RCM. This is one area, short questions will come. So we will have to go look at reverse charge cases, then come back and then try to have understanding on what will be the time of supply in such cases. I know it will be already too much for your head, but just hold on, guys. Just think that I'm your favorite movie star. I'm not that, but then still think of that. Like, you're watching a Netflix movie where documentary, it's not even a movie, it's not, but then documentary, and then you're listening to him. Okay, he's talking about something. Okay, maybe something will come to your head, something will not, but we're giving everything that we have, So there are two sections which talks about RCM. Which are the sections, please, on the chat box? Which are the sections? Which are the sections? Few sections we can remember. Charge, when we think about charge, it is section 9. So which are the sections in section 9 will be relevant? 9.3 and 9.4. There are two sections that is relevant, 9.3 and 9.4. So 9.3, what's the difference between 9.3 and 9.4? 9.4 is applicable only in real estate cases. Please remember, 9.4 is applicable only in real estate cases, and the chances of you're going to have a question on real estate is very rare, because this provision is not yet settled. A lot of confusion that is they still going around, and they don't want to test you on that level at intermediate level. So your provisions, notified cases of RCM, 9.3. Let me ask you a question first. Just to clarify 9.4. Today, other than real estate cases, I'm a supplier. I make outward supply to an unregistered person. I'm registered. Okay. to an unregistered person, I make an outward supply. I make an inward supply, which means I make a purchase from an unregistered person. Case number 1. Is it taxable? Is it taxable? Generally, what charge will come if it's taxable? Case number 2. See, exam question will be like this. They'll give you clumsy information. They say that I'm giving you details of Mr. Gopal, who has made supplies in multiple methods. Mr. Gopal has made an supply of some goods to Mr. Raju, who's unregistered. He made supply, which means he's making outward supply. Is it outward supply? Is it taxable? It's not taxable. It is always taxable. The moment supplier is registered, outward supply is always taxable. No doubt. It is taxable. So this will be added to his outward tax liability. So irrespective of whether the supplier is registered or unregistered, it is always taxable. You should remember, because supplier is registered. Supermarket is registered. When another person who's registered or unregistered go to that supermarket, it's always taxable. Now, supermarket went to someone and purchased a certain product. Now this here, the input supplier is unregistered and it's not real estate cases. Second case, is it taxable or it's not taxable? It's taxable or it's not taxable? You have for your exam, this is not taxable. This is where you will have confusion on RCM, whether supplier will have to pay and then claim ITC. No, it is not taxable. Only in real estate cases it is taxable. So if there is a question and they have added a point, Mr. Gopal made purchase from Mr. Rahim, who's unregistered. If there is an unregistered purchase, that is not taxable. Please remember this, because RCM 9 subsection 4 is applicable only on reverse charge cases, is applicable only on real estate cases, and there is no ITC question because there is no tax itself is paid. Are you guys with me? So when an unregistered person is not even registered under GST, there's a small dealer or there's a tea shop guy who's supplying tea to this particular supplier, there is no GST paid to this tea shop. So thereby there is no question of credit. So people get completely confused about it, because unregistered supplier making supply to someone, it is not taxable as of now. Reverse charge is applicable only in real estate. But a supplier making supply to an unregistered person, who is a registered supplier making supply to a registered person or unregistered person, the moment supplier is registered, they become taxable. Are you having clarity in this? Can I have a quick yes if the clarity is fully there? Okay. Okay, I think that's something that is clear. So because only when that is clear, it will make sense for me to go to the other areas. Now, 9 subsection 4 is about unregistered, registered, registered, unregistered. But 9 subsection 3, government has handpicked 18 cases and said, recipient, you have to pay taxes. And this is generally clubbed together with exemption chapter, and they're asking a lot of questions. Let's look at this. First one, insurance agent to an insurance company will have to pay. Second one, banking, you have 4 type of transactions in banking, which is super relevant for you. 4 type of transaction in banking. So if you are looking into banking, it's better, it's super better for you to have a quick revision on banking, including all the areas relating to banking. So let's look at a banking revision. Okay. So we are going to look at, in each of these cases, who is liable to pay taxes. I've given supplier, recipient, value, what charge, and person liable. There are 4 cases that we have. I'll tell you the provision first so that you can easily comment on this by looking into and say that, I understood. First one, recovery agent providing services to a bank, it is under RCM. So there are 4 people involved in banking sector reverse charge: recovery agent, direct selling agent, business facilitator, business correspondence agent. So all of these treatments are different. So examination, if they want, they can ask a banking sector wise question, and you need to have clarity. Recovery agent, there is no condition given for supplier and recipient. Recovery agent to a banking company, financial institution, that's all. So first question, recovery agent is Mr. Ram providing services to SBI 10,000. RCM is applicable, SBI. Second one, recovery agent, but this time it is Tata Recovery Private Limited. It's a body corporate. Still a reverse charge, that bank will be liable, HDFC. Third case, DSA. When it is direct selling agent, reverse charge will be applicable only if the direct selling agent is an individual. If it's a direct selling agent, DSA is a private limited company or a partnership firm, it will be coming under forward charge. So third example, direct selling agent to who's Mr. Rahul provided services to Federal Bank 30,000, it will be under RCM because direct selling agent is an individual. Direct selling agent Fin Private Limited to Axis Bank, it will be under forward charge, Fin Private Limited, because it's a body corporate, not an individual. Now we have business facilitator, business correspondent. Business facilitator will provide services to a bank, whatever type of business facilitator, individual, it's like recovery agent. Recovery agent, whatever type, no problem, it is under RCM. So Mr. Adarsh, a business facilitator to SBI, is under RCM. Facilitator Private Limited became a business facilitator to ICICI Bank, it will be still under RCM. Okay. Then problem is, if the business facilitator is attached to a rural branch of a bank, you have to remember, in exemption there is an area which says if the business facilitator is attached to a rural branch of a bank, then it will be under rural branch of a bank, then it will be under what charge? It will be exempted. Rural branch. So as RBI has categorized them, rural, urban, semi-urban, so only rural category will get exemption. Okay. Then business correspondent is a big company. You remember it as a big company. So business correspondent providing services to a bank is under forward charge. Then business correspondent has a lot of agents. So agent of business correspondent providing services to business correspondent will be under reverse charge. Now, Microfinance Private Limited is a business correspondent to SBI is under forward charge. But Ram, who's an agent of business correspondent to Microfinance, will be under RCM. Again, business correspondent cases of agent cases and all that will be exempted if this business correspondent is providing services or attached to a rural branch of a bank. You have to remember. Now, in case of banking, there are exemption also. Okay, I don't want to explain you all of this. Rather, I'll tell you how the questions would come. We'll directly go to question. Remember, interest is exempted. Charges are taxable. In charge also, if there is credit card, debit card charges given to the merchant, if the transaction is 2,000 or less than that, then that's also exempted. Foreign exchange transaction to public is taxable. Bank to bank is exempted. Interest on credit card is taxable. This is how the cases are. Now let's look at. Now they can give you HDFC Bank or some bank's information and then ask you to compute how much will be the GST, net GST payable. Interest on housing loan exempted because it's interest. Interest on personal loan exempt because it's interest. ATM charges taxable because it's charge. Commission on forex from ICICI Bank, from another bank, exempt. Commission on forex from Reliance, it's a business, it is taxable. Bank to bank only is exempt. Commission from merchant up for transaction up to 2000, exempt. Above 2000, taxable. Interest on credit card is taxable. Now, since the bank is having both taxable as well as exempted, okay, there is a rule called as Rule 38, which says that banks have an option. Either they can do apportionment of credit. If they purchase, they can either do apportionment based on how much is their ratio of exempted to the total turnover, or these particular institutions, all these particular banks, what they can do is they can go ahead and then, instead of doing this, they can go ahead and then take 50% of credit. So if they purchase something for 1 lakh, they can take 50% credit. Which means if they purchase something for 1 lakh and paid GST of 18,000, they can take credit of 9,000. Balance 50%, they'll not get the credit. So there's a provision like that. Rule 38. Okay. Then, if you remember sponsorship services, when it will be, is sponsorship taxable? Yes, sponsorship is different from donation. In donation also, you remember a circular that we had? What was the circular that we had on this? Putting the name of the donor in the premise of charitable trust, accepting donation. Will it amount to sponsorship? No, that is done only due to gratitude and it has no advertisement value. Thereby, it will not be considered to be a supply and it is not taxable. So we had few words like contractual obligation. We had few words like reciprocity. The consideration and the supply has to be for each other. Consideration should be for the supply and supply should be for the consideration. So that is missing in case of donation. Even though you're putting the name, it will not be a supply. Now, when it becomes sponsorship, which means there's an advertisement value, when it will be charged under RCM, supplier of sponsorship services can be anyone. So IPL was sponsored by Dream 11. So supplier is IPL, Dream 11 is the recipient. When it will be, is it taxable? Yes. What charge is applicable? It will be taxed under RCM. Reason being, when reverse charge will be applicable? Reverse charge will be applicable when the recipient happened to be a body corporate or partnership firm. This is the understanding that we had. Then, director of a company providing services to a company is under RCM, which I've already told you. But there's a circular which clarifies a little bit more based on the TDS. So if they can ask a question, which is a new question, they can coin like this. Salary is not a supply. So generally, we have directors like managing directors, executive directors, whole-time directors, they'll receive salary. If they are receiving salary, income tax TDS will be under section 192. Then it is not a supply. No need to say when I pay salary, I'm a company, I pay salary to my director. It is not liable for GST. I don't need to do any reverse charge deposit. But I pay some payment other than salary. How do I identify is it salary or not salary? I'll have to look at which section I have deducted TDS. If I have deducted TDS under section 194J, which in turn means that I've done TDS for professional services other than salary. So if there is 194J TDS, which means that that payment is not salary, it is taxable and it will be taxed under RCM. The company will have to pay taxes. That will be the understanding that we need to have. So it could be independent directors getting sitting fees or the MDs getting some fee for consultancy services given outside his employment. So anybody, any director getting some fees other than salary will be taxed under RCM. GTA cases, we don't need to bother too much. We have to directly jump to the GTA summary. I used to tell everyone when I was taking classes that The day before the examination, you should look at this chart and the exemption for sure. GTA, Goods Transportation Agency. GTA, if they want, they can opt for forward charge. Benefits, they can take ITC when they make an inward supply. But tax rate, if it is under forward charge, they have to collect 12% from the customer, any customer it be. But even if the GTA is under forward charge, if the case is exempted, what case is exempted? If the GTA is providing services to an individual, it is exempted. Forward charge or reverse charge, whatever, it is exempted. No need to collect taxes. Then, if they don't opt for forward charge, what's the demerit they have? GTA, they will not be able to take ITC. Now, will it be directly under reverse charge? No, I have to check who's the recipient. The GTA did not offer forward charge. The recipient happened to be, suppose the recipient happened to be a individual or HUF other than a registered person, then we call them as other than specified persons. Then it is exempted. But what if it's a specified person itself, which means well, there are 6 types of specified person: factory, society, cooperative society, partnership firm, body corporate, any person registered under GST. All of them are specified person. In that also, there are few exemption available, like small consignment. What do you mean by small consignment? The freight is less than 1500, less than or equal to 1500, or they are a small consignee, which means the freight is to that person. In a big consignment, the freight to one person is less than 750. Or we are transporting certain specified goods, which is generally tested in multiple exam. If you're transporting goods like 6 of them, carefully look at the screen, try to get a screenshot in your head, not in your mobile phone. You cannot carry this in the exam. In your head, 6 products. If you transport this in GTA or a train or a vessel, it is exempted. Which are the product? Agriculture produce: milk, salt, food grain including flour, pulse and rice, defense and military equipments, relief materials, newspapers and magazines, organic manure. All of these product, it is exempted. What is exempted? Freight is exempted. These products are not exempted from GST. That is this separate discussion. Here we are talking about freight. Transporting them, it is exempted. Then, a person who's registered only for TDS also need not pay any GST under RCM. Otherwise, like you think about it, if there's a company which is generally getting a service from a goods transportation agency, it is the company who will have to pay because they are specified person. Or I'm a registered person, I got a GTA services, I have to pay tax under RCM 5%. This is the understanding that you need to have. Advocate, very simple. One summary sheet will do all the understanding. Day before exam, just think about this. Legal services. If the court or tribunal is giving, court, when I say tribunal, I mean not arbitral tribunal, constitutional tribunals like income tax tribunal or high court, supreme court, all of their fees are not even a supply, which is there in schedule 3. Okay. Then legal services. Okay, legal services, when the supplier is an advocate, which could be an individual advocate, senior advocate, a firm of advocates, or an arbitral tribunal. You remember that if this legal service is provided by advocates and related persons to a person other than business entity, which means an individual, it is exempted. Advocate providing services to a government, it is exempted. Now, how do you remember this? Advocates, the government has no intention to collect taxes from. And only charge that they want to bring to the advocate is reverse charge. Now, to an individual, I cannot bring reverse charge. So advocate to individual exempted. Advocate to government, I cannot bring reverse charge because reverse charge government will come. So exempted. Advocate to a small business entity whose turnover is less than the threshold limit. So registration threshold limit I'll look at, and then if it is less than 20 lakhs or 40 lakhs or 10 lakhs as per their limit, then that is also exempted. Now, very important question. I'll ask you a question. You give me an answer. Okay, this could be an examination question. Reason, one of the RTPs of final had this particular question. I'm an advocate. An advocate provided services to orange printers who is registered. Orange printers who is registered for 1 lakh. A registered orange printers got a service from an advocate for 1 lakh. But orange printers last year turnover happened to be only 18 lakhs in Kerala. Is it taxable? If it is taxable, under what charge? I'll repeat again. Advocate to orange printers. Orange printers is registered. Turnover is only 18 lakhs. 1 lakh is the service value. Taxable? If yes, what charge? It is exempted. That's the correct answer, because even if the entity is a voluntarily registered entity, still the exemption will be applicable. So advocate to a small business entity. How do I understand small business entity? They're based on their turnover, it is exempted. Then what is taxable? An advocate, an arbitral tribunal providing services to a big business entity having having turnover more than the threshold limit. Okay, that will be taxable. Who has to pay taxes? The business entity has to pay taxes. Now, one advocate to another advocate is also exempted, because both of them are advocates. They cannot tax them. Then government services, it's very simple. I have given you a summary here. Government services can be welfare services or a services which can be provided to business entity. If it's a welfare services, which means the individuals are getting the service, only 3 services are taxable in that front. Generally, it's exempted. Only 3 services are taxable, which are the one is Department of Post Services, which means seal services. What is seal service? Government department, which means postal department, providing 4 type of services, it will become taxable. Even if the recipient is an individual, you and I get the service from Department of Post, or if the service is received by Reliance, both of them are taxable. Seal services, speed post, express parcel post, agency service, life insurance services, these 4 are taxable. Now, Department of Post provided services to Lakshadweep government. Taxable, not taxable. Speed post services provided by Postal Department to Lakshadweep government. It is exempted because to another government is exempted. Okay, so seal services to any person other than government is taxable. Okay. Then second one, if the government provides services in relation to vessel or aircraft, then government transportation of goods and passengers, these are taxable even if it is received by an individual or by a person other than business entity. To make it easier, they said it's all taxed under forward charge. Except these 3, even if it is received by a business entity, like speed post provided to Reliance is taxed under forward charge. So other than these 3 services, which are the services? Postal Department service, vessel aircraft service, transportation services. These 3 services, except these 3 services, all other services provided by government to business entities are taxed under reverse charge mechanism. Okay. Who has to pay? The business entity has to pay. Now there also there is an exemption limit they have said, like the advocates. They say small business entity whose threshold limit is less than 20 lakhs or whose turnover is less than threshold limit, that is exempted. So there's an additional exemption that they have given there also. Okay. So let's look at our notes. They said government or local authority services to a business entity is under RCM except for these 3 services. Okay, these 3 services are under forward charge. Seal service, aircraft and all that. Now, renting of immobile property by government. This is also a frequent examination question. Say, Kochi Corporation. When I say government, it includes local authority. Kochi Corporation had a corporation building. They gave it on rent to a private academy. Now, rent is collected from them. Is it taxable? Yes, commercial rent is always taxable. So if it's a commercial property, it is always taxable. Now, under what charge? If the tenant, if the tenant in Kochi Corporation building who has taken that private academy, if they are registered, it will be under RCM. If they are not registered, it will be under forward charge. So always it is taxable. Don't think about exemption. Okay. Exemption is applicable for cases other than these. Other than forward charge cases, it will be having an exemption if the entity is very small. Then we have two cases of reverse charge further, which is music composer, photographer, etc. It will be under RCM. Music company, etc. has to pay the taxes. Then other cases is very simple. There's an author providing services to a publisher. It is under RCM generally, but they wanted to give an option to the author. If the author wants, they can opt for forward charge, but the author has to submit a declaration, and it will be applicable for 1 year period. Okay. After that, if they want, they can withdraw this option. They want to move to reverse charge again, they can do that. RBI services provided by RBI is exempted. Services provided to RBI is taxable. Even if RBI has a lot of overseeing committee members like independent directors, that's also taxed under RCM. Then rest of the cases, I'll tell you the important ones. Now, security services. Okay, security services. First, you should understand the meaning of security service is that you're supplying a security personnel. Okay, say I want some security to be put into my building. Generally, it is done by agency. Now, when will I have reverse charge? First, I have to look at the agency type. What should be the agency type? They said any person other than body corporate. The agency should not be a company. So in Kerala, the most famous agency is Bright India Private Limited. That's a private limited company, which is a body corporate. It will be under forward charge. Now, if it is done by a partnership firm agency or an individual running an agency, it will be under reverse charge only if it is provided to a registered person. I personally wanted to put it in front of my office or in front of my home where I don't have a GST number. They cannot ask me to pay taxes under RCM. So it is not under RCM unless the recipient is a registered person. So SBI take security from Bright India Private Limited, forward charge. But SBI take security from Mr. Ram, who's running an individual agency. It will be under RCM, SBI will have to pay. Or TCS takes the services from Mr. Ram, who's running an individual agency, under RCM. But if the recipient is registered, but they are registered under composition, then RCM is not applicable. Or they are registered, but only for paying TDS, then also RCM is not applicable. Then we had an additional case where they said renting of motor vehicle will also come under RCM, but very complicated structure it had. They have not asked question, but just to ensure that you remember it correctly, you should think that, okay, there's a Swift car, somebody is giving Swift car for rent. So there's an agency in Kochi MG Road, which gives Swift car for rent. You can go Bharat Taxi, they're giving car for rent. So if you want a car for rent for a month, they will give you. Okay, so you can use that particular car. Now, this particular renting of motor vehicle, will it be under RCM or FCM is the question. Now, there are two rates applicable for that. First of all, a question of RCM will come only if they have not taken 12% rate. If they have taken 12%, it's under forward charge. If they have not taken 12%, irrespective of whether under forward charge or reverse charge, they'll have 5%. So supplier itself here, compared to GTA has forward charge only 12% rate. Then reverse charge only 5% will come. There is no forward charge 5%. Here for renting of motor vehicle, forward charge 5% is also there. So if they take 12% full ITC, 5% they have restricted ITC. But when will I have RCM applicable? When as a renting of motor vehicle is done by a supplier, an agency who is renting motor vehicle, which is not a body corporate. So a non-company rent agency giving motor vehicle on rent to a body corporate, and they have not opted for 12%, then it will be under RCM. So three conditions to be satisfied. That's all you should remember. One, supplier should not be a body corporate. Second, they should give this renting a motor vehicle to a body corporate, and they should not have opted for 12%. All other cases will be forward charge. Now, so we have listed a large number of cases where taxes will be paid under reverse charge. Now, in such cases, what will be the time of supply is the next question. So RCM cases, time of supply is very simple. Let's look at that. Now we have RCM applicable for goods and service, but then goods case is only MCQ question, this part. Okay, only MCQ question 12.3. So we don't need to bother too much. There are 3 dates. So we have to first understand when it comes to RCM, the general RCM time of supply would be the date of payment. Okay, because that's the event that the recipient has control. So recipient also will have to pay tax based on time of supply next month 20th. Service cases are there a lot, we have discussed now. In all such cases, recipient will have to pay taxes and he will have to have a time of supply. So date of payment is relevant, but I need to keep a due date. So they said if it's goods, make the payment within 30 days from the invoice. So date of payment 31st day from invoice and date of receipt of goods, whichever is the earliest, will be the time of supply. But service case is more important for us. 13.3 is what they'll test in your exam. Now, if it's, we have two cases. One is general case, another one is special case. What is special case? You receive a service from an associated enterprise outside India. How do you talk about associated enterprise? More than 25% shareholding you think about. It's an associate enterprise. If it's not an associate enterprise, then date of payment or 61st day from date of invoice in case of service. Here it is 31st day, here it is 60 days. So after invoice you receive. Okay, when will you receive invoice? When your supplier is registered and you receive invoice. If you make payment within 60 days, then date of payment. If not, 61st day from date of invoice will be your time of supply as a recipient when you are paying taxes to the government. Now, if you are receiving from your own associate enterprise, don't take the invoice and don't trust the invoice. Instead of that, take date of payment or date of entry, due entry in the books. But what if your supplier is unregistered and reverse charge is applicable? Supplier is unregistered. Recovery agent, he is not even registered. He provided services to the bank. So he is not giving me any invoice. So my entry date and my date of payment, whichever is earlier, will be computed. So there is a note that we have written there, note number 1. If you want, you can quickly read that note at your end. Now, vouchers are gift vouchers. If the vouchers are specifically, you can identify for which product it is, then issue of voucher will be the time of supply. If not, it will be the redemption. Okay. So what I'm going to do now is that, since that I've gone non-stop for 2.5, 3 hours now, I think I'll take a break for 15 minutes. I don't want to take a lot of break because I'm trying to push all of you through. But I think you need a breather at this point. So we'll take a 15 minutes break. I'm not going to do much activity. I'm just going to have a quick snack and then come back. By the time you probably, if you want to just refresh or maybe take a nap for 10 minutes with proper alarm, okay, don't doze off. I'm going to do after the 15 minutes break, I'm going to do a 1 hour, like maybe 45 minutes to 1 hour. I'm going to give you a full brush up on exemption because I have a total doubt that people might not be remembering exemption when they go through exemption at their end. So I wanted to give you a full revision on exemption. So you just listen to me for exemption for 45 minutes to 1 hour, right? When I come back, then I'll do ITC, then I'll go back to value, then I'll do the supply chapter, and then we will close it. That's how we are going to, that's our plan now. Okay. So I'm going to give you a 15 minutes break, 9:45. Don't go anywhere, just the same Zoom. and the same uh, YouTube, you come back. Shall we start, everyone? I hope you guys had a snack and then you guys are ready for another marathon. Okay, now let's start with exemption discussion. We'll quickly go through all the exemptions from our notes. So you can relax and listen to me. If you remember these exemption to the examination, it's good. So we know that exemption is asked in two separate segments. One is in the MCQ. Second one is that they're asking questions of exemption inside computation question. Okay, so be it valuation or ITC, they'll include an exemption case as well. And earlier they used to ask only from the important areas. Now they have left it. They're asking from nook and corners. That makes it very important for you to go through our notes only. Like I don't think anybody gets enough time to go through the entire exemption reading from the institute material, which becomes very difficult for anyone to do. Okay, so I'm going to share the screen. Is the screen visible to everyone? Okay. So we basically in GST, the most important point that you have to understand about exemption is exemption is dealt in section 11. But the word exempt supply, when we use the word exempt supply in GST perspective, we not only include exempted supply by notification. So which means that we are not only including section 11 cases or section 11 notification, which is notification 12 bar 2017. So whenever you're writing exemption answer, if you want to quote the notification, it's 12 bar 2017. So we also have certain goods and services where if you refer to the classification table, in that table rate column, they have mentioned it as 0 or nil. So 0 percentage and nil are same, and both of them are called as exempt supply. Then non-taxable supply, which means we have HP man. In our discussion we had discussed alcoholic liquor for human consumption. These two are outside the ambit of GST, and these two are, see, HP man at this point it is outside the ambit. Alcoholic liquor constitutionally it is outside the ambit. So these items are called as non-taxable supply. That's also called as exempt supply. What is the common factor? Why are we calling nil rate supply, wholly exempted supply, and non-taxable supply as exempt supply? Reason being, the reason why we are calling that as exempt supplies, whenever you're making your outward supplies exempted, government has said you don't need to pay taxes on your outward supply. You can't take any ITC. That's why I've written no ITC, no ITC, nor in all the cases of exempt supply. But there is one more term called as zero rated supply. Important question. Zero rated supply is not a specific supply of a certain items of goods or certain type of services. It is not that. The understanding of zero rated supply is a supply which will be tagged as zero rated. Again, I'm telling you, there is a supply that is made that could be subject to any rate. It could be zero rate, nil rate. It could be at 5%, 12%, 18%, 28%. It could be any rate. The moment I do something with that supply, it becomes a zero rated supply. Say there's an exempted product. The moment I export this exempted product, it becomes a zero rated supply. I have an 18 percentage product, but the moment I export this, it becomes a zero rated supply. The benefit is that the moment you started exporting, you will be available to, you don't need to pay taxes on export. The moment you're doing export, you have to enter into an undertaking with the government, and government says no taxes payable on export. At the same time, you're eligible to take ITC. This is the additional point that you have to remember. Okay, now just a second. Yeah, so what you have to understand here is the moment it becomes zero rated supply, you are eligible to take ITC. At the same time, your outward supply, you don't need to pay any taxes. That's the special case. Only two supplies are called as zero rated supply. One is export and supply to special economic zone. So in both of these cases, you can take ITC, but you don't need to pay taxes. And it's just a benefit that is being given. Now, exempt supplies, we have to, exempted goods, we don't need to look at. Exempted services, what we have to look at. And there is industry-wise understanding. I'm going to be super fast in discussing you those, and you will have to, again, I said, remember, okay, what is taxable, what's not taxable? Okay, let's try to understand. First, charitable and religious activities. Now, the moment you hear about charitable and religious activity, you should look at this as an understanding. The benefit of exemption is available to charitable entity even if they charge some nominal amount. But if they have taken 12AA registration in income tax. So they are income tax registered charitable entity and providing specific charitable services. In that they have public health, advancement of religion, spirituality, yoga. Multiple times they have tested. Isha Yoga Center of Sadhguru provides yoga coaching and charges 2,500 exempted. But what if a hotel accommodation is provided by a charitable entity registered under income tax? That is not a specified activity, but they will get the exemption of, if the per day rent is less than or equal to 1,000 rupees, there is an exemption for hotel that will be available for hostel as well. Important point. What about a residential camp? Residential camp run for yoga will be exempted because only when the main activity is yoga. But other fitness programs like aerobics, dance, Zumba training and all that is taxable. Now, when it comes to a religious place meant for general public owned by a charitable or religious trust, and that's why there is so much of sections is given here for a religious trust also. So a charitable and religious trust registered under income tax, if they are giving their premise for rent, that is also exempted, but there's a limit that is given. So the temple trust, the church trust, the mosque trust, all of them also will get exemption provided The room rent is less than 1000 per day. Again, the point here, like I told you earlier, 200, less than 200. Here also, they have not included the word less than or equal to. In consolidated tax invoice, it said less than 200. Similar to that, here also, they said charitable trust. If they are giving, if the church is giving a room for rent, it is less than 1000 is exempted. If it is Kalyana Mandapam, community hall, less than 10,000 per day, it is exempted. If it is a shop, commercial shop, it is less than 10,000 per month, it is exempted. More than that, 10,000 or more or 1,000 or more will become taxable. Now, religious pilgrimage, Tirtha Yatra, by normal religious pilgrimage, a lot of companies which arranges religious pilgrimage, taxable. Packages, pilgrimage packages are taxable, except for the government sponsored schemes like Kumayon Mandal Vikas Nigam Limited. You will hear this word, you will remember exemption. Hajj committee, state or central Hajj committee, it is Hajj packages are exempted. Now, training or coaching of in recreational activity, fun training relating to arts and culture and sports is by a charitable entity, then it is exempted. Agriculture related activity has, what do you mean by agriculture? What is not included in agriculture? Rearing of horses. The CA final examination I wrote in service tax, they had asked this question. They said, like the summer in Bethlehem, you have seen, right? So there is a horse farm. Okay. Rearing of horses is what they do for races. Will that be treated as agriculture? They said no, because agriculture should be for food, fiber, fuel, or raw material. It can be any plant or any life forms of animal, but it does not include rearing of horses. Now, when I say agriculture is exempted, normal activities like cultivation, harvesting, threshing, protection, testing, and all that is exempted. Then farm labor supply is exempted. Missionary renting is exempted. Vacant land with or without a storage is exempted, giving it on rent. Then fourth point, they had asked questions sometimes. They said making an agriculture produce, which agriculture produce means first product out of agriculture. Like if it's in Munnar, strawberry is an agriculture produce, carrot is an agriculture produce. Now that whatever you do to make that marketable in primary market, cleaning, trimming, sorting, it is exempted. That activity, it's a service that is exempted. But the moment you make tomato ketchup out of it, it becomes commercial or it becomes a retail packet. It's something that you do like retail packing or changing the character, essential character. If it is changing the essential character, it becomes taxable. If it's not changing, then it is exempted. Loading, unloading, packing, storage, and warehouse has gone haywire. A lot of amendments there. Full confusion now. Agriculture produce, if you load, unload, store, packaging, and warehousing is exempted. Now, what is agriculture produce is the question. Rice is not an agriculture produce, paddy is an agriculture produce, but rice specific exemption is there for loading, unloading. So what you have to remember, for rice, transportation exempted. What is exempted? Transportation is exempted. Loading, unloading, packaging, storage, warehouse is exempted. But what is taxable? But agriculture produce, is rice an agriculture produce? No. But what is taxable? Milling of rice is taxable. നെല്ല് കുത്തി അരിയാക്കുന്നത് ആ മില്ലിംഗ് ആക്ടിവിറ്റിന്റെ മുകളിൽ കൊടുക്കുന്ന ഫീസ് ഇറ്റ് ഇസ് ടാക്സബിൾ. Then they said tea, like black tea and processed teas and processed coffees are not agriculture produce, but there's a specific exemption now that is given for storage and warehousing. Loading, unloading, packaging is taxable now. So what is agriculture produce? Tea leaves. Similarly, jaggery, sharkara is not an agriculture produce, sugarcane is. Now, but both jaggery and sugarcane, all of them are storage is otherwise also exempted. Dal is not an agriculture produce, but whole gram, rajma is an agriculture produce, but storage is exempted for all of that. So I have given you a summary. Loading, unloading, packing of these items are taxable. So cereals, pulses, fruit, nut, vegetable, spice, copra, sugarcane, jaggery, raw vegetable, fiber, such as cotton, flax, jute, indigo, unmanufactured tobacco, betel leaves, tendu leaves, coffee, tea, all of them, storage and warehouse is exempted. Now, first understanding that you should keep for your examination is storage and warehousing of any product that is given could be exempted. So what will become taxable? What should be your thought process? So any agriculture produce or similar product that you find, storage will be exempted. What is not exempted? Loading, unloading, packing is not exempted. Education, agriculture extension service is exempted. Agriculture produce marketing committee activities exempted. Now, warehousing of minor forest produce, this is the term, it is exempted. It's like wild honey, cartadine, tamarind, puli, all this is exempted. Fumigation in an agriculture produce only is exempted. If there is a farm where I'm storing rice and I do fumigation there, no exemption because rice is not an agriculture produce. Fumigation means pest control. Now, but if I store wheat and then I do, or I store paddy and then I do fumigation, that will get exemption. Artificial insemination of livestock is exempted. So they're not tested there, but then education service is very important, could be confusing for you, so very careful. Services by education institution to 3 people are exempted: students, staff, faculty. Then entrance exam is exempted. But what is an education institution in GST? Only 3 type of institution is included. One is preschool till higher secondary, which means your nursery, primary, your LKG, UKG, primary, upper primary, secondary, higher secondary, all of them are education. Private tuitions, no, they are taxable. That's why all your private tuition fees are taxable. Then institution having curriculum recognized by any law in India, which means all your UGC Act, whatever institution comes under UGC Act and under all university and colleges, UGC approved at all of them, including the deemed ones, all of them are exempted from paying GST on their course fee because they're providing services to student. What about ITC, ITI and all that? Because they are not under UGC, they are under NCVT, SCVT approval, Council for Vocational Training, Job Oriented Training. That's also exempt. What about IAM? That's also considered to be an education institution. But what about foreign courses? CPA, ACCA, CMA, taxable. Very important point there. What if these educational institutions are providing services to corporates like campus placement service? Come to my organization, hire. IAM is saying that you come to my organization, I'll show you very qualified, India's best MBA graduates. You pay me 10 lakh rupees. Taxable or not taxable? Taxable or not taxable? It is taxable because it is not provided to student, not provided to staff, it's not provided to faculty. Similarly, now whatever we have discussed, what about entrance examination? Taxable or not taxable? It is not taxable. Like entrance exam fee is exempted. So your tuition fees is taxable, foreign course fee is taxable. This is our understanding. So Byju's app fee is taxable. And all the money collected by education institution from corporate is also taxable. Now, what about support services taken by education institution? What about those kind of services? There are a lot of support services taken by education institutions, right? So support services taken are categorized into 5 of them. They are exempted. But the exemption is not common for all the type of education institution. That's why I've given you a very beautiful table where you can look at. So there are 3 categories of education institution. Here it's schools, here it's universities, here it's ITI kind of, ITC and ITI. First type of services, or we can say first 3 is only exempted if it is provided to schools. So school taking transportation services from a transport company. For whose transportation? Students, staff, faculty. Catering services taken, including the midday meal system, government sponsored midday meal is there, no? Uchakanji. So that program, if there is somebody catering is there, that's outsourced to catering. That fee is also exempted from GST. The supplier is the caterer. The supplier is the transporter. It's exempted. Security, housekeeping is outsourced, exempted. But college outsources it, taxable. IT outsources it, taxable. Then this is tested in multiple exams. Okay, so if they want, they can twist and create a question for you, all of you. Carefully listen, I'll tell you. Say Adlex, you know Adlex, right? Adlex Community Hall, which is a very big auditorium that we have. All World Trade Center in Bangalore, or World Trade Center in Chennai. Suppose there is an examination of ICA that needs to be conducted, or examination of Don Bosco School or Delhi Public School to be conducted. They have entrance exam or some exam. They have given this premise for rent. So the supplier is this community hall, or supplier is this private entity giving the hall for exam. To whom? To a school or to ICI. ICI comes under university category. Okay, it's curriculum approved. Or to an ITI. All of it is exempted. Providing teachers for that, exempted. All of that exempted, but only services are exempt. So any services relating to admission services, examination services, all of them are exempted. I'm just giving you examples. Then, but that is exempted for all the three. Then last one is even tricky. Ernst and Young was appointed by IIM to do their monthly journal, online education journal. It is exempted. But appointed by Delhi Public School, taxable. That exemption is only given here. ITI, taxable. Now, private ITI also will get exemption. Boarding school is provided to students, it is exempted. What if the college provides BCom with ACCA combined 4 lakhs, taxable, because that becomes a mixed supply. But BCom with computer training, that's an incidental and ancillary activity. It's like a composite supply. So if it's a recognized course and an unrecognized course, or taxable and exempted course, separately bill, then you will have no problem. Now this is an amendment. DG, Director General of Shipping approved courses, marine courses are exempted. Now, this IIMs generally do executive programs. Already running corporates, they can go to IIM and then get trained for 1 week, 2 weeks, very costly, 1 lakh, 2 lakh. Taxable or exempted. Now, IIM Calicut has a data science program for executives. 1 lakh rupees, taxable or exempted. That is taxable. But IIM MBA is exempted. IIM PhD program is exempted. BBA MBA combined program is exempted. Healthcare services, very simple. Healthcare service, what do you mean by healthcare services? Only when you understand that, you will be able to have proper clarity. Now, whose healthcare services is exempted? There are 3 people who can provide healthcare services and enjoy GST exemption. First, clinical establishment. നമ്മുടെ മണ്ടയിൽ എന്താ ഓർമ്മിക്കേണ്ടത്? Hospitals. Authorized medical practitioner, practicing doctors, paramedics, nursing staffs, support staffs. They provide healthcare services, it is exempted, including transportation of patients by ambulance. There was an exam question where they have asked, Mr. Raju was traveling back home in an ambulance of his neighbor, which he got into while he was coming back from college. He paid 500 rupees for that ambulance. So ambulance has been used as a ambulance has been used as a taxi. They're not using it for transportation of patients. Taxable or exempted? Taxable, because they have used the word patients here. If transportation of patients happens in ambulance, it's exempted, no GST on that ambulance charges. Now, healthcare services by these 3 people are exempted. But what do you mean by healthcare services? It can be diagnosis, treatment, care. But the important point, it can be healthcare only if it is provided by a recognized system of medicine in India. What is recognized system? I've already given the code word here. You can imagine or think about it and then get the expansion of it. Ayushna. What do you mean by Ayushna? A stands for Ayurveda. Y stands for yoga. Yoga is approved. Yoga treatment can be exempted. Unani, Siddha, homeopathy, naturopathy, allopathy, all of them. But what about others? There was an exam question which talked about pranic healing system, taxable. Reiki healing system, taxable. Acupuncture, taxable. Cupping, taxable. All of these are different medical field other than Ayushna, all of them taxable. Consultation. Includes transportation of patients to and from clinical establishment. If the hospital arranges for pickup and drop, Air ambulance examination question. Air ambulance, it is exempted because it is for from clinical establishment to the patient and back. But your healthcare excludes hair transplant, plastic surgeries. These are all taxable. Hair transplant, probably in 5 years, I might have to go for hair transplant. No, let us hope not. But that will be taxable. I'll have to pay 1 lakh. No, it's very costly now. If it's a very reasonable rate, 1 lakh plus GST, 1,18,000, I'll have to pay extra because of GST. Because that's not considered to be treatment. Because my hair, I have no problem with hair. So I cannot treat it as healthcare. So that becomes taxable. But what if someone else, I don't want to take example for me here, someone else met with an accident and then they had to do hair transplant? That becomes part of healthcare. So that's how you should differentiate. Someone met with an accident or they had some birth defects and they had reconstructed. So they said reconstruction exempted, beautification taxable. Remember about this. Cord blood bank, if you see words on them, it will not get repeated very often. It will stay in your head. Cord blood bank stores stem cells, the primary cells, that charges for storing it. It can be used later. Storage charges 10,000, 15,000 storage. Deep freeze it should be. That is exempted. Veterinary clinic. Doctor veterinary clinic, that is exempted. Now let's look at a few additional clarifications that we need to make. What about in a hospital, you have taken a room for admission, like some COVID patients admission, or you've taken a room, that's exempted because that's also considered to be healthcare. Now, in hospitals, there are two types of doctors, consultant doctors and salaried doctors. Salary, not a supply. Consultant doctor fee, that's also exempted, healthcare. Now, in a hospital, when somebody is admitted for 10 days, they were charged 10,000 rupees for that. But in that, only 7,500 is treatment, 2,500 is using the facility. Full 10,000 is exempted. Food supplied in a hospital, if the canteen supplies food to on staff, it is taxable. It is supplied to patients as a part of treatment, it is exempted. Only that is exempted. So I went to the hospital because my relative wanted to consult, and I went to the canteen and had a biryani, that will not get exemption. Government services that we've already seen, I'm not spending too much of time explaining those. Construction services, you have to think about, what if you construct? I'll give you a few examples so that I can remember this. What if you want to construct an independent house in your village? Now you went to a contractor and gave him the contract. And you're an NRI, you said 50 lakhs, you buy everything, construct a house for me. Taxable, not taxable. It becomes taxable, guys. It becomes taxable because construction of an independent house is exempted only if the contractor gives you only service, pure labor contract. The moment he gives you also goods, it becomes taxable. Similarly, it has to be construction, erection, commissioning. It cannot be a repair. Understanding? And it cannot be a residential complex. It cannot be 10 houses together. Okay. It has to be a single residential unit. Then it is exempted. Similarly, there are government schemes like housing for all urban mission. And there is government scheme like PMAY. In that scheme also, government will pay certain money to the contractor and then they will construct a house. That is also exempted. Again, it has to be a pure labor contract. Now, transportation, very simple. One example we'll try to understand what happens with transportation. I traveled in railway. AC coach, taxable. Sleeper coach, exempted. This is the understanding. General, exempted. So AC taxable, other than that, exempted. I traveled in metro, mono, tramway, exempted. City-based railway services, exempted. Inland waterways, Kochi ferry travel, boat travel in waterways. There are two types of waterways, no? Inland, which means backwaters, Kayal, Nadigal, okay, which means rivers, and coastal waters.
Sea waters. Sea waters within India exempted. Public transport only exempted. Inland waterways, sky and ferry transportation exempted. Tourism taxable in both cases. Houseboat becomes taxable. From India to outside India will become taxable because that is coastal waters outside India. What about auto rickshaw? That is exempted. E-auto rickshaw, electric auto rickshaw exempted. Meter cabs, per hour cab, per kilometer cab, that is also exempted. Bombay, no, Kali Pili taxis exempted. But Uber taxis, if it uses GPS, GPRS, Uber taxi is called as radio taxi. Radio taxi, Uber, Ola, radio taxi. The name is radio taxi. What it uses? Internet and GPS. Internet and GPS. That is taxable. What about flight? It is generally taxable. Flight is generally taxable. Two exemption is available. One is if you're going to Northeast. Northeast, Seven Sisters, Sikkim, Arunachal, all those places if you're going, that flight charges to and fro is exempted from GST. Similarly, if there is a new airport and they get a viability funding, some funding from government to reduce the prices, that funding is also exempt. Then what about buses? KSRTC. So they said buses, KSRTC, line buses, normal buses. They said bus, is it a non-AC bus? What is the name we are calling for buses in GST? Stage carriage or contract carriage. That is exempted if it's non-AC. If it's AC Kallada buses, AC KSRTC buses, that is taxable. Goods transportation is something that I've already discussed, but still to get you better clarity, I'll tell you. See, there are two exemptions that is available for generic exemption available for goods transportation. And goods transport exemption gettum. One is if I'm taking goods by road. Second one, inland waterways. Inland waterways and road is generally exempted. But road, I have two taxable cases. One is courier, that is going by road, taxable. GTA, that's all going by road, taxable. So by road, other than GTA and courier is fully exempted. I have 10 sacks of pepper with me in my house. I wanted to bring it to the market. I'll not go arrange a GTA and all that. I'll do a very typical normal common man thing. I'll go to the market. I'll find out if there is a lorry or there is some kind of a transport vehicle. I'll ask him, fix a rate. He'll come. I'll also join him. We will do the transportation. I'll pay him the money. It is exempted because it's not GTA. It's not courier, so it's exempted. Inland waterways is exempted, but vessel and railway, if you transport railway equipments, that is exempted. But there are 6 products that is exempted, which we have discussed in GTA. Very, very carefully, you will have to understand those 6. I've already discussed this. Leasing, there was some amendment in leasing. They said leasing, what is the income of the leasing? Lease charges. And some of the leases, if it is for a very long period, like 30-40 years of lease of land I'm giving, then there will be upfront payment. What is the exemption that is available? If it's a long-term lease more than 30 years provided by whom? Government or governmental undertaking. Okay, there are Kerala government has an undertaking in Kottayam which gives industrial undertaking. So it has huge places where they're giving it on lease for 30-40 years. They said upfront charges will be taxable. Sorry, upfront charges will be exempted. Upfront can be upfront charges. Say, for example, monthly rent fixed is 1 lakh, but upfront they have to pay because it's huge number of years. Upfront they have to pay 10 crores, but in 5 installments, 2 crores. That 10 crore will not be subject to GST. That's the exemption that is available. But say government has given me a property and I put a resort there. Will I get exemption? No. It has to be either an industrial plot or a financial service plot. Industrial or financial service plot. What if I don't use for that purpose? Then your exemption is withdrawn. You'll have to pay GST. Leasing of rolling stock asset by Indian Railway Finance Corporation, buying coaches, wagons and all that, and then giving it to Indian Railway for lease is exempted. Skill development courses, NSDC, you remember, all exempted. This 15th case, multiple exam they're asking. Very simple case. Artist. What are the art forms they have exemption? Music artist, dance artist, dancer, musician, theater artist. But it has to be either, it cannot be Western. It has to be either folk or classical. And they should not get more than 1,50,000, and they should not be doing this performance as a brand ambassador. All these conditions are satisfied, they'll get exemption. Now, admission to zoo, national park, tiger reserve, museum, wildlife sanctuary, and protected monuments. Like Taj Mahal is a protected monument. Edekel Guha, protected monument. Those places, irrespective of what charges, whatever may be the charges, it's exempted. But places like circus, music performances, planetarium, award functions, concerts, sporting events like IPL, ISL, their exemption is there only if the ticket value is less than or equal to 500 rupees. Now, membership fee, is it taxable under GST? Yes, membership fee is generally taxable under GST. So membership fee is generally taxed under GST. Club membership fee or whatever membership fee it is. But there are few membership fees which are exempted. First one, trade unions. Second one, if the club is actually supplying exempted goods or service. Third one is interesting. I stay in a flat. So we have a membership fee that we have to pay called as monthly maintenance fee. So in this flat, whoever is the flat owners, all of them together, in Kerala, there is an act called as Residential Welfare Association. So Residential House Welfare Association is there. So we have formed with all the owners for welfare of common living. There is a residential association. So this association will have all the flat owners as members. What if I have two flats? Totally there are 100 flats though. What if I have two flats? Will I get one membership or two membership? You'll get two membership actually. Per flat is the membership. So I have to pay a membership fee. Whether this membership fee is taxable, they said up to 7,500 rupees. It is exempted. What if I have only 20 flats and I'm collecting monthly 10,000? Monthly 10,000. Okay. Which means, so monthly, I have only 10 flats, monthly 10,000. So in 1 month, 1 lakh rupees is the maintenance fee collected. So in a year, my maintenance fee is 12 lakhs. So which means that even though my maintenance fee is more than 7,500, my annual collection of this Housing Welfare Association is only 12 lakhs, which is less than the threshold limit. So I don't need to take registration. So in such cases, even though value is more than 10,000, more than 7,500, it is still not taxable because the welfare association has to be registered, which means that their total monthly maintenance collection should be more than threshold limit of 20 lakhs. Now it is exceeding 20 lakhs and monthly collection is more than or equal, more than 7,500. If it is 3,000 rupees, we are paying monthly rent in monthly maintenance fee in this particular flat where I'm staying. Taxable? No, we don't need to pay GST on that. But what if it was 10,000? There are 350 flats here. What if it's 10,000? It's more than 7,500. I'll have to pay 10,000 plus GST. This is understanding. That put some additional amendments there. Those are clarificatory circular, so they can test you with that. Then what are the other exemptions that we have? Transfer of going concern. Transit cargo to Nepal and Bhutan. Renting of residential property for residential purpose. Okay, so if you're staying in a house for rent, that is exempted. This is important. So if you're in a hotel, if you're staying and your daily rent, that is realized value. Menu card says 2,000. Make My Trip gives you a discount. You're paying only 800. Taxable, not taxable, not taxable. Less than or equal to 1,000 per day per unit of accommodation. Electricity bill, if you see, you have a lot of charges, shifting charges, maintenance charges, something. That is taxable, but not the electricity charges is not subject to GST. So distribution of electricity by discoms, like in Kerala, it is done by KSEB. That is exempted. But charges like installation, duplicate bill, and all the testing fees and all, there are a lot of charges these days comes on electricity bill. That is subject to GST. Your toll, Palekara toll, it is not subject to GST. So this is tested, guys. Market is important. Providing vehicle on hire. Renting of vehicle. You're giving your vehicle on hire. This is an exemption. When one, you're giving a motor vehicle more than 12 passengers. Motor vehicle more than 12 passengers, which means what? You're giving something like a bus to a state transport undertaking. So KSRTC is asking you a bus and you're giving monthly rent 50,000, you're giving a bus. Instead of buying a bus, KSRT is taking the bus on hire or lease. That is exempted. This is tested in the exam. Raju Goods Transportation Agency. This is how the question came. Raju Goods Transportation Agency has taken 5 truck on hire from Eicher Motors. So 5 trucks were taken on lease by Raju Goods Transportation Agency for transportation of goods. Question is that particular, and there we are paying each truck 10,000 per month, 50,000 per month is the hiring charges. Taxable or exempted? Exempted. If you're giving a GTA, a goods transport vehicle, a truck, it is exempted. What you're giving? Giving it on hire. Next is, say I am providing transportation to Delhi Public School. Delhi Public School is paying me 1 lakh. Will it be taxable or exempted? That is exempted. If you remember, we had discussed about Delhi Public schools outsourcing transportation, that is exempted in 1 ton. Now this transporter has taken one bus from someone on hire to provide the service to Delhi Public School. That is also exempted. Subcontracting of transport of students. Then this is the latest addition. Here, important point is, it is only a local authority. So if I'm giving an electrically operated vehicle, again, more than 12 passengers, electric buses. Kochi Corporation bought a lot of electric buses. So instead of buying the buses, Kochi Corporation decided we will take electric buses on lease, or I'll take it on hire. Pay 50,000. Kochi Corporation meets the condition, local authority, and they're taking electronically operated vehicle. For each month, they'll pay 25,000, exempted. So there are 4 exemptions that is available. Then FSA license is exempted. This is tested again and again. Let's look at this. Services to a recognized sports body by another recognized sports body. So there was an exam question which was asking, there are so many recognized sports body again. So there was an exam question which was asking, say, super champions recognized by Future Group provided a services to, say, another cricket club. Will that be exempted? No. When I say recognized sports body, it's a national level sports body like BCCI, Sports Federation, Olympic Committee, all that. Okay. It's not like recognized by Reliance. Then there are individual services provided to this national level body that is exempted. Now, individual is providing services, which means individuals are getting money. On what capacity? Player, referee, umpire, coach, team manager. All of them are exempted. So question is on what is taxable. Commentator is taxable. There was multiple questions. Commentator is getting, say, Harsha Bogle is getting money from BCCI, it will be subject to GST. See, insurance schemes and all, there are few NPS schemes and army schemes, PM schemes and all exempted. Micro insurance were less than 2 lakh values also exempted. Not generally asked question. This is asked question. This they are asking. We have already discussed about services provided by. I know that you would have already reached at the maximum that you can toil for a day, but just keep it in your mind that you can always, you're stronger than what you actually think you are. So you have to just think that, okay, maybe if you'll doze off also, just hang on there. Just hang on there, because you can sleep a little extra tomorrow. No problem. You get like 6-7 hours sleep tonight, like after I finish, you go and sleep for tomorrow. Don't get up like 5 o'clock. Don't get up like little late, because day after, like tomorrow night, because day after you have exam, tomorrow night your sleep might not be that good. Today you will have satisfaction that you have sat for, even after the examination, you sat for already, we've almost reaching 4 hours. So that's a very good achievement. I did not personally do that in many of the examination, believe me. So you can tap on your shoulder and say that, good job, boy, good job. Anyhow, let's just hold on a little more. We will try to push a little extra. Services provided by government, local authority, we have already seen. Like 3 services is taxable and 2 business entities taxable. Other than that, 2 individual welfare services are exempted, and all that we have seen. Here, what about services provided to government? They said services provided to government is exempted, because services taken by government for some welfare purpose only, they would have asked some private entity to provide service to them. But they have said it has to be for good purpose. How do I clarify it's a good purpose? They said it should be for functions of panchayat and municipality under Article 243G, 243W. Then it is exempted. There's so many functions that the panchayat and municipality does. It's not like, government has taken services of an IT company and they get exemption. No. Services provided by a third party to government, local authority, governmental entity, if it is for the functions of panchayat and municipality under constitution, like urban development, the road to construction, that this. But it has to be a service, pure labor service. What if it's labor and goods? Then they said goods has to be less than 25%. Composite supply, if it's having both goods and service, then goods should be less than 25%. Then also they'll get exemption. This is something that they final level they're asking every now and then. Then you know that ration shop is there. Ration shop is not run by government, no. Ration shop is run by whom? They call it ration shop as fair price shop. So ration shop is run by, there is a person who gets commission on the sale of these products. That commission is exempted. So we are done with exemption revision. That's good. So we completed within the time span we planned, 45 minutes. Now let's go to ITC. ITC is a mountain when you look at the day before the examination, but it is not like that. ITC is a very nice chapter. If you remember that, then you will get a wholesome clarity, awesome clarity you will have from the entire area. I'll tell you the important areas that you have to look at in ITC. Okay, definitions and all, I'm pretty sure you would have gone through. Section 16 is what you should look at. Section 16, section 17.5, section 18.6. This is how we first knock off. Condition for availing ITC. We've already seen 36.4, which says like it has to be whatever you want to take ITC, it has to be reflected in your 2A or 2B. Otherwise, you will be able to take only 10% additional. So in 16 subsection 2, it details out what are the conditions to be satisfied for you to take ITC. There are 4 conditions that needs to be satisfied, but not every condition is like generally tested. So generally the conditions that are tested are this. First, he should have the invoice. When I say he should have the invoice, they're saying that invoice, tax invoice, debit note, or other prescribed document. So it could be invoice or it could be other prescribed documents. What are the prescribed documents you have? It could be tax invoice, revised tax invoice, debit note, invoice under RCM, input service distributor document. If you're importing bill of entry, any of these document you should be in possession. So there are cases where in examination they are testing like the testing was like this. Say they have mentioned in certain examination questions that this particular person, he has purchased for 2 lakh, paid GST of 36,000. Out of this, 50,000 rupees worth invoice is missing. Can I take ITC? Can I have answer on the chat box? Can I take ITC? No. For missing invoices, I cannot take ITC. That's simple as this. Okay. So there are questions like that. Now, in the invoices, there is a format in which you'll have to prepare the invoice, no? So this is the format. This is the pro forma of invoice. They said like you'll have to have the details of supplier and details of recipient, place of supply if it is interstate supply. If the value is exceeding more than or equal to 50,000, then unregistered recipient also, the name and address is mandatory. It has to be serially numbered, mandatory. 16 character serial number should be there. Then HSN we already know now, like up to 1.5. If it is B2C, then HSN is not mandatory. If it is B2B, then up to 1.5 crores turnover in the previous financial year, those entities, no need. 1.5 to 5, 2 digit. 5 more than 5 crores, it will be 4 digits. Quantity, value, discount, net value, rate of taxes, amount of tax charged, whether tax payable under RCM or not. Then signature. Signature, there is an additional point. They said invoice now, if it is satisfying all the conditions as per IT Act, now there is an additional point which says that invoices need not to be physically signed. No need. No digital signature required, no physical signature required. Signature is not a requirement at all. Then, but can I take the ITC if my invoice does not have all this content? I purchased something, I got an invoice from the vendor, but I don't have all this information. They said 5 information is mandatory: amount of tax charged, description of goods or service, value of supply, GST number of recipient. GST number of recipient is very important. Who can take the ITC? Only a registered recipient. If I have GST registration, then only I can take ITC, right? So first requirement, my GST number should be there in the bill. Then only he will upload the bill into the GST portal. My 2A, 2B, it will reflect. I can take ITC. So GST number is mandatory. Place of supply in case of interstate is mandatory. Amount of tax should be there. Description of goods should be there. Value should be there. These 5 details, at least these 5 details should be there. Second, I should receive the goods. So if I'm, see, in the examination question, how it will be shown? Say, I'll give you 2-3 questions. You tell me how the treatment will be. I purchased goods worth 2 lakh, GST 36,000 in the month of January. But goods are received in March. Which month I can take the credit? I purchased, paid the amount. Paid the amount, which means he received the advances also. I paid the advance also. Advance payment. In January I paid, but I got the goods only in March. But what if it's service? I paid in January for the service. Advance is paid for the service. I got the service in the month of April. When can I take the credit? Answer, chat box. When can I take the credit? Goods I understood, March. January I paid some advance for the service. I received the service in April. When can I take the credit? Only in April I can take the credit. So whether it is goods or services, the second condition for taking the credit is that goods or services should be received. It should be received. What if I purchased 500 kg in an invoice? In an invoice is the question. Okay. When I ordered in an invoice, I got an invoice for 500 kg. In January, I got 200 kg. Balance 300 kg came in March. Can I take proportional credit? No, you can take credit only in the month of March when you're getting 100%. So if your goods are received in lots or installments upon receipt of last lot, then only you can take the credit. But I have purchased raw material from Coimbatore and in the month of January, and I have asked my supplier to deliver it not to me. Instead, I told him to deliver it to my job worker. I wanted the processing to be done. So I asked him to deliver it to my job worker. And a third person received it on behalf of me. My job worker got it in the same month, January itself, job worker got it. Now, job worker finished his work and sent it to me in March. So what if a third party receives the goods on behalf of me? Can I take the credit? The answer is yes. The same month in which he received, I can take the credit. Now 16.3 is also there. What is 16.3? 16.3 talks about depreciation. Say I purchased an asset for 10 lakh. I purchased an asset for 10 lakh and I purchased an asset for 10 lakhs and I capitalized 10 lakh plus GST, 11 lakh 80,000. I capitalized 11 lakh 80,000, which means I'll take depreciation on entire 11 lakh 80,000. Can I take ITC also? Give me an answer on the chat box. Can I take ITC? I capitalized, including taxes I paid, I capitalized and took depreciation. The answer is no. So exam question, they'll say they made some purchases for 1 lakh, but the tax also has been utilized for claiming depreciation. Then either depreciation benefits or ITC, both not allowed. Next. Next is say why should I not get the credit? When will I capitalize my tax paid? I'll tell you the scenario. So we have a concept called block to credit. You remember? I purchased a motor vehicle. I purchased a car, and car is for transportation. That is meant for transportation of 5 persons. Can I take ITC? No. So I purchased the car for 10 lakh, paid GST of 1 lakh 80,000. Only option that is available with me to capitalize 11 lakh 80,000. You're understanding the differences? Now, what is the time limit for availing ITC? Next question is, what is the time limit for availing ITC? The meaning of time limit is that for me to take ITC, whatever invoices I have for a month where I want to take ITC, I will take the total of that invoice value and I'll take the total of that GST paid on those invoices, compare it with my 2A, 2B, compare it with 2A, 2B, and see how much I'm eligible. See, I found out that out of 100 invoices I have, all 100 is reflected in my 2A, 2B. So which means that I can take the credit of all 100 invoices. So I have taken credit of that particular invoices by showing that in my 3B. So in my monthly 3B, so somebody asked me that question. So I told you that if the turnover in the previous year is less than 1.5 crores, you can file a quarterly GST R1, and 10th of next month is the due date for GST R1. What about 3B? Can I file a quarterly 3B? Not possible. 3B has to be submitted on monthly basis. Payment is always monthly except for composition levy scheme or 10(2)(a). Important point here. Your time limit is to claim this in 3B. So if I miss out an invoice to show as a credit for a month, I can show it in any of my 3B till next year September 3B, which means when will I file next year September 3B? On October 20th of next financial year. Or if I file annual return before that, then date of filing annual return, whichever is earlier. Say I have taken the credit, but I did not make the payment to my supplier. Can I still continue taking the credit? They said payment is not a precondition. You can always take the credit even though you have not paid payment to the supplier. Okay, so your raw material supplier, you did not pay him, but you enjoyed the all other conditions are satisfied, you can take the credit. But if you don't make the payment within 180 days, what do you have to do? You have to reverse the credit with interest. But afterwards, after 180 days, you actually make the payment, you can again take the credit. At that time, 16.4 is not applicable. Time limit is not applicable. So these are the ledgers that we have. We have 3 ledgers for every registered person: electronic liability register, electronic credit ledger, electronic cash ledger. So whenever you have credit, it will be reflected in electronic credit ledger, and you can use this credit only to pay taxes. So there are multiple type of payments, no? Tax is there, interest is there, penalty is there, late fee is there, other demand payment is there. So credit can be utilized only to pay tax. And for balance amount, you'll have to deposit the cash, and then cash ledger will be used. So that is why in the earlier question, if you remember that interest computation question, they said out of 40,000 rupees is payable, 10,000 is used by using credit ledger. So net is cash, net tax is the tax that you will pay by using cash ledger. So if you are delaying, if you have filed the return for a month and then paid the taxes with a delay, okay, so your return is submitted with a delay, then you will have to pay interest on that particular delay, but you will pay interest on the net amount, right? Net to GST liability. There is another way of expressing that. How do you say net to GST liability? The amount paid by using electronic cash ledger. So all your liabilities there, you can either utilize your credit or you can utilize by paying cash. Cash can be used to pay any amount. Now you deposited cash by using challan. Now when you deposited challan, you mentioned you're depositing tax, but it was by mistake. You are depositing interest. What you can do? You can transfer from tax to interest. So now that is the transfer from one head to another head is allowed. We call this as major heads and minor heads. There are four major heads in GST called as CGST, SGST, IGST, UTGST, and CES 5. And all of these major heads will have minor heads, like CGST will have CGST tax, CGST interest, CGST penalty, CGST late fee, CGST other payments. And interchangeable transfer is now allowed. There is an order in which you will have to settle electronic liability register, all the dues first, then current dues, then demand. Block the credit, an important concept, sure short exam question. We can quickly recap. It is very easy. Blocked credit, otherwise known as ineligible credit, is mentioned in section 17, subsection 5. Okay. So whenever you're purchasing these product, whatever GST you paid, even though you're using it for business, you won't get the credit. So it's important to understand what is blocked and what is allowed. Section 17.5 has multiple clauses. Clause A talks about motor vehicle. Let's look at what is the blocking of motor vehicle. They said motor vehicle meant for, I'm going to read it for you. Motor vehicle meant for transportation of passengers having approved seating. They're using the word approved seating capacity. Then meant for passengers. The usage word, the usage of the word meant for means if I purchase a passenger vehicle and I utilize for transportation of goods, like I'm a jeweler, I purchased a car and I'm utilize it for transportation of my goods like jewelry. Still, it will be having blockage of credit because that vehicle is meant for transportation of passengers. And when will you have ineligibility? If that vehicle is having seating capacity less than or equal to 13%, including driver. There is some exception. So examples could be what? They, in the examination, there are different ways in which they have mentioned this. One is, in one examination, they have asked, Nokia company purchased motor vehicle, car, for transportation of employees. Eligible, not eligible? Not eligible. That is what is the blockage. Motor vehicle less than 13%, not eligible. The same company purchased a bus for 32-seater, eligible. 16-seater, eligible. But there is exception. Less than 13 also, some cases I'll get the credit. Who will get? The dealer will get the credit. Purchase and sale. Taxi, like when they are running it as a taxi, transportation companies will get the credit. Impart in driving schools will get the credit. So what about transportation of goods? The vehicle meant for transportation of goods always allowed as credit. Lorry is allowed as credit. Truck allowed as credit. Now vessel and aircraft is also a blocked credit. That is to block purchase of private jet for the directors, MDs, and all those people. That is not allowed as ITC. But if an airline purchases, they'll get the credit. A dealer purchases, they'll get the credit. And academy purchases, flying school purchases, a navigation academy purchases, they'll get the credit. If it is a cargo ship, they'll get the credit. Now the third one is little tricky. We will try to look at it. Where the motor vehicle, vessel, and aircraft, these three, wherever they are not having ITC on purchase of them, you will not get ITC on their insurance charges, servicing charges, repair and maintenance also. Exception. Where they are getting ITC, they'll get ITC on their insurance charges as well. Then insurance companies will get the credit if they are paying any of these money. Manufacturer of these vehicle, vessel, and aircraft also will get the ITC. Second set of blocked credit is food and beverage, outdoor catering, beauty treatment, health services, cosmetic plastic surgery, leasing, hiring, and renting of motor vehicle, vessel, or aircraft for which ITC is not allowed. Life insurance and health insurance. So the understanding of these is food and beverage. So your hotel bill, say food expenses claimed by a company, not allowed as credit. Outdoor catering expenses paid, not allowed as credit. Some directors grooming expenses, not allowed as credit. Health services, not allowed as credit. Surgery expenses, not allowed as credit. Now leasing, hiring, renting of motor vehicle, vessel, which are not allowed, for which ITC is not allowed. Say a company has taken Uber for one of their employees for transportation, not allowed as credit. Life insurance, health insurance for the employee paid. The insurance premium paid by the company is also not allowed as credit. But there are exceptions. What is the first exception? Inward supply of the same for outward supply of the same. We have taken an Ustad Hotel example out in the class. You remember? Ustad Hotel has purchased food and beverage. Beachway International, the 5-star hotel, purchased food from Ustad Hotel to sell that particular biryani to the customer. Now that purchase of biryani from Ustad Hotel is allowed as credit. Pinna, statutory obligation. If the government says that mandatorily you will have to do this, then you will get the credit. Say, to give you an example, we have taken the example of Karnataka government said, if you're working in night shift and you have women employee, pick up and drop is mandatory. You'll have to provide. Then they'll get the credit of that. Then if the company gives membership in a club or fitness center, then travel benefits, travel packages booked by the company, that's also not allowed as credit. But if it's statutory obligation, they'll get the credit. So specifically the question has to say about statutory obligation. Immobile property construction, either using works contract or on construction material purchase, both are not allowed as credit. But if it is plant and machinery, you will get the credit. Also, subcontracting will also be allowed as credit. Now, the plant and machinery does not include telecommunication towers, which is an important point to remember. Other blocked credit. Composition tax not allowed as credit, we already know. NRTP, ITC on domestic purchases. NRTP makes domestic purchases, no ITC, but NRTP was supposed to come from outside India and then do temporary business in India. So for him, ITC will be allowed if the ITC is paid on import. Sorry, GST is paid on import, will be allowed as ITC. But domestic purchases will not be allowed as ITC. Then inward supply for personal consumption. Okay, that we already know. This is important. 17.5H. Exam question comes. Inward supply of goods lost, stolen, destroyed, written off, or disposed by way of gift or free sample. I purchased certain things, that is lost, destroyed. So there are multiple questions where they say, I have purchased certain product and I've given it as gift, or I lost that particular product. Then you will not get any ITC. But say I purchased 1000 kg raw material, I used it in the process of manufacturing, I lost 50 kg. Okay, so only 950 kg came out as output. Can I take ITC of the 1000 kg itself? Yes. Reason, that is little different. That is used in the process. So process loss, there is no need to reverse ITC. But which cases I'll reverse ITC? So normal loss, abnormal loss, no need to reverse ITC. Remember, exam question can come. But out of 2 lakh rupees raw material purchased, 50,000 worth raw material was lost by fire. Can I take the ITC? No. 17.5, it's important one. Section 17 is apportionment of credit, which is quite often tested in the examination. Means what? See, I'm not going to discuss about the rules, which is not something that anybody can cover for a rapid revision. But I can tell you the logic behind it. If I have purchases I made, which I'm using only for taxable, I can always take the credit, no doubt. So my inward supply and outward supply. My outward supply is taxable, I can always take ITC on inward supply. My outward supply is exempted, then on my inward supply, I cannot take ITC. This is a common understanding we have. But what if I make one common supply, I use it for both taxable and exempted? We call this as common credit. What is common credit? I make a purchase, I'm using it for both exempted and taxable. In such cases, government is saying that you take full credit. What do you mean by you take full credit? You take, say, I paid rent. I'm a supermarket. I paid rent. On that rent, I paid GST. 18,000 rupees GST paid on rent. 1 lakh is the rent. In that supermarket, my outward supply has both exempted product and taxable product. Now, am I eligible for full ITC of this rent? No, because I'm using this rent or rented premise to sell both exempted as well as taxable product. So how much ITC am I eligible? There you are asked to do a computation. What is it? Out of this rent of 18,000, you have to check how much is your exempted turnover. So you take the credit of 18,000. Now 18,000 multiply with exempted turnover of that month divided by total turnover. Say, suppose that month I made sale of 10 lakh. Out of that 2 lakh is exempted product. So 20%, 2 lakh divided by 10 lakh, 20% of this 18,000 I have to reverse, which means 3,600 will be reversed. So 18,000 I will add to my ITC. My output tax liability I will have to reverse and additionally add 3,600. This is how the computation will work. Now the banks need not do this. Banks, if they want, they can do this computation, or they can take 50% credit. That's an option in 38. 18.6 talks about this. I have purchased an asset, which means in what is the name that we are using for asset in input tax credit chapter? Capital goods. I purchased a capital goods. I used it for some time. Now I'm reversing it, or I'm selling this off. Supply of capital goods or plant and machinery after use, where you have already taken ITC. So ideally, when I purchase a capital good and I sell it. I'll have to pay tax on the second hand sale value. Second hand sale is also taxable. So I purchase a car where I take an ITC. I sell the car for 2 lakh after some time. On the 2 lakh, I have to pay GST. I'm registered. If I'm registered. Suppose on this particular vehicle, I have taken ITC and 5 years is not over. Then you have to do a comparison on how much ITC needs to be reversed. What is that comparison? So they're saying that if you're purchasing a capital goods, a machinery you have purchased for 10 lakh, you have taken credit of 1 lakh 80,000. You have used it for 2 quarters. So for every quarter you're using, you will be eligible for 5% credit. You've used for 2 quarters means you're eligible for a credit of 10%, 18,000. Now your sale value is only 5 lakh, which means if you compute GST on 5 lakh, you need to pay only 90,000. How much credit you have taken? 1 lakh 80,000 because you purchased it for 10 lakh. Now you're selling it for 5 lakh, but you have used only for 2 quarters. Now they're saying that if you have used only for 2 quarters, you're eligible for only 10% credit. So you have to reverse either 90,000, which is tax on the transaction value, or on this 1 lakh 80,000 credit you have taken minus 10%, 2 quarters. Balance, which is 1 lakh 62,000. 1 lakh 60,000 or 90,000, whichever is higher, needs to be reversed. That is how the computation would work. Then, cases where ITC can be availed or ITC needs to be reversed. This is also something that people often get confused on. What is this? This is all cases of switching. I was not registered. Now I take registration. But by the time I was not registered, I already purchased a lot of stock. Since I was not registered, I did not take any ITC. Now when I'm selling because I'm registered, I'll have to pay ITC. Now, because of that case, if I'm unregistered to going to registration, I can now take ITC. Okay, but you can take ITC only on inputs. You cannot take ITC on capital goods. But if you're already a registered person, so first case is you're unregistered going to registration. Whatever stock you have, you can take ITC and then start selling it for GST. But you're already registered. But are registered under what? Composition levy scheme. So whenever you make purchases, you're not eligible for ITC. Now you're moving out of composition. Then whatever you have purchased at the time of composition, you did not take ITC. Now you can take ITC. Capital goods also have purchased. Then you can take ITC after reducing 5% per quarter. Now you are registered person. Again, this is only applicable when you are registered person and then you're making an exempt supply. So you did not take ITC. Now it became taxable supply. There also you can take ITC on inputs as well as capital goods. Okay, this is important. They are not asking much questions here, but if they ask, you should not get confused. Similarly, in the opposite case, you have to reverse ITC. Okay. Now I'm going to leave the ITC discussion there and let's jump to composition levy scheme. Now, before that, let me look at valuation. I'm going to look at valuation only with one question. That one single question should give you full clarity. So this is our single brothers question in practice manual, question 63. I'm going to check that question for all of you. There's no point of looking valuation separately except for questions. There's one more additional area where I want to tell you about questions. Single Brothers registered in Uttarakhand has supplied 30 tons of chemicals at 50,000 per ton to P of Uttarakhand on 8th of September. The invoice for supply has been issued on the same date. Further, following additional amounts are also charged by P. Freight 1,80,000, packing charges 1,10,000, weighing charges 20,000, cost of instrument 3,10,000. P, as per the terms of the contract of supply, Single Brothers is required to get the chemical inspected by independent testing agency before delivery of the same to P. P has paid such inspection charges amounting to 12,000 directly to testing agency. Single Brothers has also received 50 lakhs as subsidy from state government for setting up chemical manufacturing plant in Uttarakhand. P is required to make payment within 15 days of supply in terms of the contract. However, P delayed the payment of consideration and made payment in November. Thus paid 15,000 as interest. You are required to calculate GST liability in this case and due rate of deposit. Assume the rate of GST to be 18%. This is a straightforward valuation question. Can you guys read this question once at your end and then tell me on the chat box that you have read? It's better for me to just look at this question after you read at least once. I know that you would have read in the classes if you have attended mine, but there is no harm in reading it multiple times. Read the question, guys? Okay, wonderful. So let's look at the answer for this particular question by quickly running through the provisions first. Valuation is something that I want all of you to remember exactly word by word the provisions. Word by word, I mean word by word. Maybe if you have some time tomorrow, please read at this particular provision once again. Value is nothing but transaction value under section 15.1, items to be included under section 15.2 minus discount under section 15.3, right? But for me to take valuation under section 15, two conditions needs to be satisfied. One is it should not be from a related person. Second, price must be the sole consideration, should not be a case of exchange. Okay, then I'll do the value like this. First, transaction value under section 15.1. What is transaction value? Price paid or payable for the supply. So whenever you have list price or working notice, list price is nothing but transaction value under section 15.1, which is price paid or payable for the supply. So whatever is not payable, notional amount, waived amount need not to be added to the value. Now, if they have split and collected some other amount, apart from the list price, if they have collected some other amount from the customer, should I add that also to the value? The answer is yes, you have to add that also to the value. There are 5 types of other items to be added to the value. First is any taxes other than GST. There we have examples of municipal taxes. In case of cigarettes, tobacco and tobacco product excise duty, all of these are charged apart from GST. That has to be added to the value. So when ITC, the company called ITC is selling tobacco, they will first sell the tobacco for say 10,000 worth tobacco. First you have to add excise duty, say 10%. So 10,000 plus 10%, which is 10,000 plus 10% is 11,000. On that again we will apply GST. So all taxes other than GST has to be added to the value. But what about TCS under income tax? If I sell a vehicle more than 10 lakh rupees worth, I'll have to collect from the customer 1% TCS under income tax. No, TCS under income tax does not have the characteristics of tax. So no need to add. Remember this for the exam. We can add an additional point like this. Then direct third party payment, clause B. Clause A is taxes, clause B is direct third party payment. Recipient is making direct third party payment on behalf of supplier in relation to supply should be added to the value. Third one, C. Incidental expenses incurred by the supplier in relation to supply at the time or before the goods are ready for delivery or supply of services charged by the supplier to the recipient will be added to the value, which means all packing, testing, warranty, inspection charges, weighing charges. These are all examples. Okay, in the examination they'll ask. All of that has to be added. But a very important examination note I have given here. In the examination, if they are using the word delivery charges or freight, insurance charges, should I add this to the value? The answer is yes, you should add it to the value. But the working note should be section 8. You should say that goods together with delivery and insurance is a composite supply. Thereby, you have to pay taxes on that. And thereby, principal supply is goods and then freight should be added to the value of the goods. Then D is interest. Interest on delayed payment of consideration should be added to the value. Such interest will have a separate time of supply, that is date of payment, and interest is generally assumed to be inclusive of GST. So if I get an interest of 11,800, I'll assume that is including GST, or 10,000 if I get interest, I'll assume it to be inclusive of GST. Last, subsidy, only direct subsidy can be reduced, which means say Kerala government is giving rebate on Kaitari product, handloom products. That is a direct subsidy. Kerala government is giving subsidy for purchase of a machine. That's not a direct subsidy. So only the direct subsidy can be reduced. On the product subsidy can be reduced. Rebates. Non-government subsidy, it can never be reduced. It should be added back if it's already reduced. Then discount, there are two types of discount. Discount given in the invoice and outside the invoice. In the invoice means discount given at the time of supply or before the supply. If it is there in the invoice, you can reduce it. If it is given after the supply, three conditions to be satisfied for you to take the ITC. Sorry, for you to reduce it from the value. What are the three conditions to be satisfied? First one is it should be existed at the time of supply as per the agreement. Second, it has to be specifically linked to the relevant invoice. Third one, ITC on discount is reversed by the recipient. Okay, so this is the content that we have. Now let's look at solving that question. In that question, list prices 15 lakhs, 30 into 50,000. 15 lakhs I should add. Freight, should I add? Yes, 1,80,000. What is the working note? So this is how you will solve a valuation question. Computation of value is the title, particulars, working note reference, and amount which should be there. And amount the bracket rupees you can write. That a working note reference, you will have to give it in the working note reference column. Then after the question, you should come back and then write the working note reference. Packing charges, yes, working note reference is 15 2C. See, should I write the clause also? No, if you don't remember, don't write. There are ICA questions where they have ICA has given suggested answer which has only section 15 mentioned inside. They don't have subsection or clause. So as per section 15, I'll tell you the method in which we should do. Then weighing charges, same. See, you can see there are three working notes I have given. Three item I've given only one working note. I've just referred it the same. Weighing charges, cost of instrument, all has to be added. Inspection charges to be added, but it's a third party payment, so the separate working note. Subsidy from government need not to be added because it is for setting up plant. Then interest, it is to be added, but I have taken inclusive. So I've computed the value separately, and I've computed separate taxable value before interest, after interest, because interest will have a separate time of supply. So before interest, the value was this. I have computed CGST, SGST, time of supply, due date. Interest I have computed separate time of supply and due date, and I've written working notes. See, I've done a trick here. All provisions are from CGST Act. I have written common. Otherwise, everything I'll have to go and write as per CGST Act, as per CGST Act. Right? Okay, so working note number 1 was transaction value. Working note number 2 was composite supply. 3 was incidental expenses. 4 was third party payment. 5 was direct subsidy. 6 one was interest. And I've also made a working note on it is assumed to be inclusive. Then time of supply, 2 working notes I've written for interest and other time of supply. See, sales promotion schemes, there's a circular that we have to understand. We have to understand that there are two type of discounts. One is shown in the invoice and credit note based discount. Okay. So when the value gets reduced after the supply, they will issue a credit note to me that I can reduce it from the value. I think I had shared not the screen, so some of the things you were not seeing. I had actually put up the question. So if you guys have not looked at the question, if you want, you can take a screenshot of this. This is the question I had discussed, and I'm just walking you through the answers. You can pause and then read it if you want. This is how the answer is presented. Okay, computation of value. This is how the answer is presented. That's what I was discussing. Okay, so I have written the working notes as well. Each working note you can just pause and then read once again after our session is concluded. Okay. Okay, so there are certain discounts which does not exist at the time of supply. So those discounts cannot be reduced from the value. Another additional point that I want to tell you. Then there is del creditor agent and interest charged by the del creditor agent. There's a circular on that which they have not tested, but they can test a MCQ question and things like that. So the whole understanding is this: if the interest is, there's an EMI circular as well. So if the interest is on delayed payment of consideration, say I've given you two examples here. One is MyG has given the customer a mobile phone for on installment basis, and they have said either you can pay today 40,000 or for installment 11,000 each. In such cases, the customer is paying interest on delayed payment of consideration. That is taxable. 15(2)(d) is applicable. Full amount is taxable, which means that 4,000 interest is also taxable. But if Bajaj Finserv, which is a consumer finance company, have a tie-up with MyG, and MyG selling the mobile phone to the customer, and customer is getting EMI facility from Bajaj Finserv, then the customer pays installment to Bajaj Finserv. MyG gets the 40,000 immediately from Bajaj Finserv. In such cases, this interest is an independent loan activity, and that loan activity will be exempted from GST because that's a separate activity. It's not interest on delayed payment of consideration. So there are two circulars on this regard as well. There's one more question that you have on which I'll suggest you to go through at your end, is this question 84. Tomorrow, when you get some time, go to question 84 and then try to look at that. I'll tell you the reason. It's raining cats and dogs here, so let me close my windows, otherwise you will have so much of disturbance. Okay. So one quick examination point I would like to enlighten all of you with. Say in a question, suppose you have reverse charge mechanism available. Okay. If you look at this question, it has that. That's why I said it's important. I can rather take an easier example for you. How do you present it in the exam? That's something that I've seen a lot of students making a mistake on. Because ICA presented in a different order, but I suggest a different mechanism. ICA is doing it in the 3B order, but then let us do it in a different order so that you don't make a mistake. Say XYZ Limited paid rupees 1 lakh to Mr. Ram, an advocate. So his outward tax liability is 10,000. His other input tax credit, sorry, his outward tax liability is 50,000. His other ITC is 10,000. How do you compute? How do you treat this particular case? So you have a lot of other cases also in the examination, but I just wanted to deal with only this case. Reason, when a company which is registered, assume its turnover above threshold limit, they are receiving services from an advocate. It is taxed under what charge? It's taxed under reverse charge. So on this 1 lakh, 18%, let's assume 18,000 needs to be paid by XYZ Limited under reverse charge. So in a computation, which is net GST computation, how do I do net GST computation? How do I do net GST computation? In any question you take, net GST computation has a mechanism. See, it's a normal net GST computation question. How do I prepare my tables?
Computation of net GST payable by Mr. Ram will be the title. I will have particulars value GST columns. Depending upon its intrastate supply or interstate supply, I'll decide how many columns I should have. Then part A would be output tax payable or outward tax payable. Then I'll mention all my outward tax liabilities. Then I'll do a total. You can see a total value and then GST for respective intra or inter. I'll have to separate. Then I'll start with ITC. Then B will be a computation of ITC eligible. I'll compute how much is the ITC eligible. Do a total. Now I have to do a set off, and I have a mechanism for set off. What is the mechanism? You can first, what is the rank in which I can do the set off? First, IGST against rank 1, IGST against IGST. Balance IGST can be set off against CGST or SGST in any order, but net the payment has to be least. Okay, so I have to find out for which GST I have to set off. IGST, IGST, then balance against any of those in the order. In any order is possible, but ensure least total liability. Then CGST against CGST. Then CGST against IGST. Then SGST against SGST. Then SGST against IGST. This is the mechanism in which I will do the set off. That set off has to be separately shown. And also, when you do the set off, do put it in bracket only how much amount you can reduce it from this. Say I have a credit of 60,000, suppose. My liability is 54,000. My total output tax liability is 54,000. I have a credit of 60,000. In bracket, don't show 60,000 and show a negative figure here. What will you do? You will show only 54,000 in bracket. Then separately you will write additional credit carry forward if there is excess credit. That's a separate amount you can write. That's a better presentation, I feel. Okay, I've seen a lot of people writing all the amount here, again that amount there. Okay, IGST you will write full in IGST. Then again you will write in CGST, SGST. No, whatever you can set off, you write there. Okay, balance you have to put it in other. Okay, so first IGST, then you have to do this. This is the third part. Now the question that I am referring to, is that you have a reverse charge. So if you have a reverse charge, how will you include that in this kind of a question? If you have reverse charge, where will you show that? First of all, you have to understand that reverse charge, whatever tax you pay under reverse charge is eligible as ITC. For examination, we'll assume that it is payable in the same month and you're taking the credit in the same month. So you will show it in ITC eligible, and after you find out net to GST, add an additional point. What is that you will add? Tax payable under RCM. That will be separately shown there. That is the presentation. That is what I have given in that question. The question I'm referring to is the question 84. I have presented it in our practice manual like that. So go and refer that so that you will have an idea on how you should do the computation. Okay. Okay. So that's something that I wanted to tell you. Now we have only the basics left. One is composition levy scheme. Another one is supply. Rest everything we have covered. So let's quickly knock off composition levy scheme, which will take only 5 minutes for me, because we are going to wind up by 11:45. Then I have few discussion to do. Then, okay, let's look at this. Okay, so in our example, how do I show? 18,000 will be added to ITC. Then 18,000 will be again after net GST computation. Again, 18,000 has to be added to be paid in cash. Taxes to be paid in cash by RCM. So ITC 10,000. Again, we will add ITC tax payable under RCM 18,000. Then we will compute the net to GST. How much will be the net GST? 50,000 minus 10,000 minus 18,000, which will be 22,000. But after that, again, I'll add tax payable under RCM 18,000. So total tax payable under cash will be 40,000. This is how I'll do the presentation. Okay, composition levy scheme, we have 5 points to learn, and all the 5 points are very simple. First, what is the return that you will file? It's an easy compliance for sure. You have quarterly compliances. Normally, everybody pays the taxes on monthly basis, but CLS opted person pays it on quarterly basis. CMP 08 due date is 18th. Annually, financial year return is there called as GSTR 4 financial year return, which they'll have to file on or before 30th of April next financial year. Then there is an annual return. So three type of returns. One is a statement CMP 08 GSTR 4 annually, then annual return, which is before 31st December next financial year. What is the rate? If you opt, if you're a manufacturer, 1% on turnover in a state. If you're a trader, 1% on taxable turnover in a state. If you're a restaurant, 5% on turnover in a state. Who can opt for this? Not everyone. If you're in general category and there is a different version of special category here, it is Satnam 3. Sikkim, Arunachal Pradesh. T is not Telangana like registration. T here is Tripura, N is Nagaland, Uttarakhand, Meghalaya, Manipur, Mizoram, all the three. That limit in those states limit is 75 lakhs. All other states 1.5 crores. If the aggregate turnover is less than these two, then they can opt for composition levy scheme. Aggregate turnover definition is important. In composition levy scheme, when you compute aggregate turnover, you don't include interest, but aggregate turnover includes taxable, exempt, everything. Okay, but it does not include purchases. Inward supply is not included even if it's taxed under RCM. If you want to take composition levy scheme benefits, you can't collect the taxes from customer, you can't take ITC, you can't make interstate outward supply. Purchases are okay. You cannot choose this vertical wise. You have to choose for all your firms. There are certain persons who cannot opt for composition levy scheme. CTP, NRTP, ECO, person supplying through ECO, like a person supplying through Amazon. Then manufacturers, not traders, manufacturers of pan masala, tobacco, and ice cream, and aerated waters. Then both manufacturer and traders cannot opt 10-2A. Okay, so in case of composition levy scheme, who cannot opt? Only manufacturers of PTA and aerated water. Traders can opt actually. So if there is a small shop, കുട്ടി കടകളില്ലേ, അവിടെ ഇവര് സിഗരറ്റ് വിൽക്കുന്നു എന്ന് പറഞ്ഞിട്ട് അവർക്ക് കോമ്പോസിഷൻ എടുക്കാൻ പറ്റില്ല എന്നുണ്ടോ? അതില്ല. But manufacturer of cigarette, ITC, they cannot. Then person supplying non-taxable supply, then composition levy scheme is allowed only for restaurants in service. All others cannot. But what if they are providing a small service, which we call as marginal service? So there's an additional proviso in section 10.1 read with 10.2a, which says if they are providing where supplier of goods or their restaurants and they have another service, if that service is within the limit, then they can still offer composition levy scheme. What is that limit? 10% of the turnover in a state or 5 lakh, whichever is higher. So if their turnover is up to 50 lakhs, then up to 5 lakhs they can have service next year. If their turnover is up to more than 50 lakhs, 10% of their turnover can be service. Now, when you're computing service turnover also, include everything, but don't include interest. Interest is not included in any of the computation for composition levy scheme. But what if they are still not able to opt for composition levy scheme? Why? They are providing services other than restaurants, or they are actually having services and goods, and the service portion is above the limit. Then they can still go for another scheme called as 10.2a, which is a new addition to the act itself, 10.2a. So 10.2a says that they can offer the scheme, but their turnover has to be less than 50 lakhs in the previous year. What is the benefit? 6%, 3% CGST, 3% SGST, because they can only make intrastate supply. Condition same as CLS, 4 conditions. Person not eligible, same as CLS, but in case of pan masala, tobacco, ice cream, aerated waters, both manufacturers and traders cannot opt to this. Special points, interest need not to be included. Then, if composition or 10.2a, if they are opting this in the same year of registration, then till I take registration, I don't pay any taxes.
But when I compute how much is my concessional taxes, my aggregate turnover my turnover computation will be from 1st April till my turnover becomes 50 lakhs. I have to pay, I will get the benefit of concessional taxes. To give you an example, in the year where I started my business, till my turnover becomes 20 lakhs, I will not take registration. From 20 lakhs to 50 lakhs, I can be under this scheme and pay for that 30 lakhs balance. I will pay 6%. Above 50 lakhs, I'll have to pay normal rate. There are few procedures. You have to put it in public notice. You have to opt before the start of the year, but new registration can opt together with it. You can, if you want, you can voluntarily withdraw. If you don't, you're not eligible, but you still availed, you can be levied with penalty. So in composition levy scheme, it's very important for us to look at the questions. I hope you will do that. I'm trying to save your time on going through the topics. Supply definition, I can just give you an overview with the basic part. That's sufficient. Okay, so Section 7 defines what is supply. Section 7 and Section 8 talks about supply. Section 8 talks about mixed supply, composite supply. Composite supply is when it is naturally bundled. So when there is more than one supply coming together in conjunction with each other, and one of it is a principal supply, then it will be considered to be, it's naturally bundled, it's considered to be composite supply. If it's a composite supply, apply the rate of principal supply, which covers predominant portion. If it's not a composite supply, it's coming on a single price, it's called mixed supply, apply the highest rate. This is what Section 8 says. Very straightforward. There are a few circular clarifications which you can look at. And sales promotion circular is important. There are two sales promotion schemes they are talking about: buy one get one free and free sample. In case of free sample, it is not a supply, reverse ITC. Buy one get one free is a supply of two items for a single price. No need to reverse ITC. To give you an example, I'm giving gift item. I'm giving gift to a customer worth 500. I gave it as free. No need to pay taxes. But if I purchase that gift and I have taken ITC on that purchase of the gift, reverse it. I am selling chocolate together with I'm selling a juice box. Juice is Tetra Pak. My chocolate is 100, juice box is 10. I'm selling it at 100 only now. Juice is free. But treat it as two items supplied at 100. You can take the ITC of juice. This is the understanding. Next. Supply is defined over four subsections. One, inclusion. General definition says that supply should be having supply of goods or service or both. Consideration should be the taxable person in the course of furtherance of business. In case of importation or service, business is not required. Consideration, if it's there, even if the business is not there, it's a supply. Then in clause C, consideration is not there, business is there. Four activities are a supply. Permanent disposal, where ITC has been already claimed. Second, second case is distinct person or related person. We have defined a related person, we have defined distinct person. Distinct person means in a state you have two branches separately registered. Then para 3 agent. Okay, agent who's supplying to the customer in his own name. Okay, invoice is issued in his own name. Then last case is importation of service without consideration in the course of furtherance of business from a related person or an establishment outside India. Then certain items in schedule 2 is just classifying goods and services, so not very important, very less number of questions. Then exclusion, negative list, you have 6 activities you have to look at which are not a supply. Then government notification is there which are not a supply. One is Article 243G, 243W activity of Panchayat and municipality. Second is important. State government giving alcoholic liquor license. Alcohol is outside the ambit of GST. Similarly, alcoholic liquor license giving. So state government giving alcoholic liquor license is also exempted. It's not exempted, we should say it is not even a supply. But all other license given by state government, it is supply, it is taxable under RCA. Okay, so that's the understanding of supply as well. Now, initial chapter, you don't have, I don't think you have anything that I have to revise you with. If not, I'm exactly done with my revision, exactly at the time that we had planned. GST council, they asked questions multiple times, okay. But I don't think they'll keep repeating that. We know about this. These are all theory areas these days, they are not asking this. I think at the same time when I prepare to close my classes, I'm closing my classes. At the same time, I think my my throat code is broken because I spoke continuously for 5 hours. I hope at least for there are a lot of people. I think my efforts is like nothing compared to your gut feeling that I still have a lot of people on my YouTube channel still watching it live. So excellent efforts, guys, for hanging on there and then just listening to me for the entire thing. I know that I have not done questions yet. I hope in the morning you will do questions. I might, you let me know on the comment box if you want me to do a half an hour or 45-minute session where I solve last 3 to 4 RTPs on one stretch. 1 hour session I can do. But if you want me to do, I'll do tomorrow at 2 o'clock, so that when you're tired of studying, maybe 1 hour if I take from you again and I solve 4 5 3 4 at least, because prior to that will be an old RTP. So those RTP questions, if you want me to just walk you through, I can do that. That will be a happy thing to do. So you let me know on the comment box on my YouTube so that I can look at when I wake up in the morning. I'll do that. So I think this examination is concerned. The questions, we know the pattern. There will be a case study question which will be taking you some time. So what I recommend you to do is that, see, don't leave the case study at for the later filling up. First you do the case study itself. Do finish the MCQ. Finish it faster. Don't take so much of time for MCQ, but finish it faster. But then take that efforts of finishing that MCQ, because 12 marks, do not leave any MCQs because there is no negative marking. So do that MCQ first. Then in that 28 mark lot that you have out of 40 marks, try to look at, so what they're going to ask, we already know there will be a question which will be exemption clubbed with valuation and ITC. There will be a question where they'll explain on the procedure part and then try to make you answer on something or the other. There will be a question where they'll test you on composition or the charge of GST. There will be a question out of blue moon which you don't even remember seeing anywhere. So all these type of questions will be there, but don't give up. Answer all 40 marks. How much ever answer all 40 marks. Give maximum content in there. Please do not forget income taxes. Tomorrow, I'm doing this today because I want you to learn income tax tomorrow. Please take at least 10 hours or like 8 9 hours of your efforts on income tax tomorrow. Do that proper revision. We should all pray that each one of us, not just for one person, no, let us have collective prayers that has more energy. I'm praying for all of you, not just one student who's attending it here. I'm for all of you. So let us all pray for all of us that this batch wherein we did the rapid revision, all of us come out with flying colors and an exemption in the paper. So even if the paper comes to be very tough, do not give up. Think properly, present it properly, and then try to impress them that you have given your best attempt. Okay, so thank you so much for your patient listening throughout the night. It's a tremendous effort, and I'm extremely proud of you. And I really hope that our efforts will come into fruits in the examination. Thank you all. Very good night.